I'll be asleep, and I'll wake up a few hours later. This is Bloomberg Surveillance live on Bloomberg Television.
With the First Word News, I'm Ritika Gupta. The second and final presidential debate is tonight in Nashville. It's one of the final high-profile chances for President Trump to change the narrative of the campaign. Polls show him losing to Joe Biden. Debate rules have changed. A candidate's microphone will be muted at times when the other candidate is speaking. The president has complained that this is unfair. He says the same thing about the choice of topics and the moderator, NBC's Kristen Welker. And House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin have made further progress on a coronavirus stimulus package. But Senate Republicans are reluctant to embrace any deal that's led by Pelosi. Language for the bill would have to be drafted by the weekend if lawmakers are to vote on it before Election Day. Democrats on the Senate Judiciary Committee plan to show their unhappiness with the Supreme Court Amy Coney Barrett. They will boycott today's vote to advance the nomination to the full Senate. Republicans have a majority on the panel, so the move won't prevent the nomination from going ahead. And in the UK, Chancellor of the Exchequer Rishi Sunak reportedly will give more help to businesses affected by the coronavirus. According to the Financial Times, Sunak will announce more funds for firms under Britain's Tier 2 virus rules. Those require pubs and restaurants to close by 10 p.m. and bans mixing between separate households indoors. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Just a little bit of risk aversion this Thursday morning. Good morning to you all. Live on Bloomberg Television, this is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramovitz, I'm Jonathan Ferro. Francine Lacroix is away today. Here's the price action, just to give you a quick snapshot of things. An equity market that's slightly negative on the S&P 500, down 12, call it 13, off by a third of 1%. Bit into the bond market at the long end, curve just a little bit flatter after the steepness that's come through in the last few days. Your yield on a 10-year, 0.81%. And in foreign exchange, we flipped that around as well in G10 too. Dollar weaker over the last couple of days, stronger this morning through G10. Euro dollar comes down a third of 1%, Tom. 118.26.
Very good. Let's get right to it here with futures deteriorating -12 down to -10 down to -12, I should say. The absolute hallmark of the Gabelli method is securities analysis. That's how Mario Gabelli started in all of his different funds, the Gabelli Value Trust and such. Always make up an interesting portfolio, yes, centered around value, but far more centered around the growth aspects of value. Christopher Marangi is the co-chief investment officer of Gabelli, and he joins us now. Chris, I want to set up the timeline here that you're on. In May, long ago and far away, when we were measuring a pandemic out 6 weeks or 8 weeks, a cliche was a bridge out to 2021. 2021 beckons. Where's the end of the bridge for you right now?
Good morning, Tom. Well, unfortunately, there's not going to be an armistice day for COVID. There's not going to be one day when we wake up, we throw all our masks away. This is a process. It's an individual process, up to each individual. When they reach that point of indifference, when they're willing to get on an airplane, willing to go to a concert, spend money like they used to. And so, as we look out, again, we see improvements in 21, much of that dependent on what happens with vaccines and therapies, obviously, through the remainder of this year. But improvement nonetheless, and we're willing to discount that in buying some stocks today.
Where would you be buying, Chris?
Well, we've been focused, obviously, on value, but particularly on many of the companies that were clobbered by COVID, but which have not yet returned to prior levels. And there are a lot of those, and they tend to be in the more cyclical areas. Mario's talked about this acronym of bottle stocks, banks, oil, travel and leisure. We focus more on the latter two elements there. And small cap. And by the way, value and small cap have been outperforming for the last month and a half, little noticed.
After underperforming for a long, long time, Chris, which you know, let's talk about why that can continue, why the divergence can develop into some convergence in a more durable manner.
Yeah, and again, I think much of it is predicated on a successful reopening, entering of a new economic cycle in which small cap and value tends to do well. But some of it is also just, many of the large cap growth companies, again, the big five companies that dominate most of the big indices, just running out of steam. They've done tremendously well for a good reason. They're safe havens in many ways. And as we go more risk on, there's probably a little less reason to own them.
Chris, do you care that the virus is spreading and worsening in Europe and in the U.S. when it comes to calling for this rotation?
Yeah, obviously it's something that we watch. And obviously the reemergence, or the third peak, I guess as some people are calling it, is not a surprise to us. Again, we have a forward look. I think what matters is, can we get through the next 6 months? What is the path for therapies and vaccines? And, we think by sometime next summer, again, we'll see more green shoots than we do today.
The zeitgeist right now, Chris Marangi, is to focus on the top of the income statement, particularly with growthiness out there. It's about revenue growth, even if it's organic revenue growth, mid or even higher single digit as well. Do you guys buy that revenues matter? Or are you still traditionally down looking at cash flow?
Yeah, we're cash flow focused. We don't own a lot of companies that trade on a multiple of revenue, a few, but cash flow is ultimately what matters. And obviously there's a lot of elements beyond just organic growth, selling more products at higher prices. Margins probably going to be under pressure as the labor market tightens and commodity prices go up.
I've got to go to a great Gabelli focus, which is media. Your update on the streaming wars. We saw the Meg Whitman, Katzenberg project just completely collapse here in the last 24 hours. Quibi as well. What does that signal on media's capital investment?
Yeah, I don't know if I would call that the canary in the coal mine for streaming, but there are going to be a lot of streaming companies that are not going to be successful. This is still a scaled business. Netflix, obviously, at the top of that list, has done an amazing job taking shows that didn't even do well on YouTube and turning them to hits like Cobra Kai, amongst others. So there's going to be a handful of winners in the streaming wars. Again, Netflix is one of them. Disney's probably another. We'll see where some of the ad-supported versions like Peacock shake out.
Chris, great to catch up. You're going to be sticking with us. Looking forward to the conversation. Chris Marangi there of Gabelli Funds. Netflix yesterday, Tom, finishing lower by almost 7%. Expectations for that company this year just building up. and then bang yesterday.
Yeah, you talked to Paul Sweeney about it, and as Chris Marenghi says, there's just 1 million people playing. You know, all I do is observe what I see at home, which is right now Emily in Paris is so in, and I don't get it, but I'm not supposed to.
I don't get it either. Does Lisa get it? Emily in Paris?
Emily in Paris, Lisa, help.
I've got boys. I'm sorry. I mean, not to be cliche, but you know that's not what they're watching. I will just
They're
say,
not into that.
Netflix share is still up more than 50% this year. So
Yeah,
you know the disappointment yesterday. People kind of
Don't get me
still
wrong.
shrugging it off. They're going to be fine.
Emily,
They crushed it this year. That's for sure.
Nailed it.
It sounds like you watch Emily in Paris,
I
Tom.
do. I do.
Out of the three of us.
The third
Sounds
episode,
like
I
your
did
kind
start
of thing.
crying.
All right.
Okay.
You know,
Things you share.
she's jilted
live on
by
air.
the older guy.
Okay.
You know, her French is like worse
You
than
just-
mine, and
the
that's
more
bad.
You're just
you
killing the
know.
plot. I imagine the Bloomberg audience is the demo for Emily in Paris, and now everyone's upset that you've ruined the plot. Coming up on Bloomberg Markets The Closed, James Fitterling, Dowig CEO. That's at 2 p.m. in New
is
York,
coming.
7 p.m. in
Painful.
London. Got a few more hours of this. I get excited every morning about it. From London and New York, this is Bloomberg.
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From London and New York for our audience worldwide, this is Bloomberg Surveillance Live on Bloomberg Television alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. Francine Lacqua is off today. Equity futures recovering just a little bit. We're down 5 on the S&P 500. In the last 24 hours, all the Fed speak. This is the quote from policymakers over at the Federal Reserve. It comes from the Fed's governor, Lael Brainerd, who said the following: premature withdrawal of fiscal support would risk allowing recessionary dynamics to become entrenched, holding back employment and spending. It was a really forceful message from Governor Brainerd, Tom. Now, the cynical amongst us may say that this isn't just a prod to the authorities down in D.C. to do more. Maybe it's an application for that job in the Treasury if Biden wins the election. She is, of course, reportedly one of the front runners.
Well, there's no question about that. And it is that season where, you know, those people, Chair Yellen even talked about there, and she sort of laughed me aside the other day, John. But she's certainly more than qualified, has all the right attributes that you would see in the historic idea of a woman as Treasury Secretary. But that's to come. I just think it's a statement that we've seen, John, correct me if I'm wrong, across countless speakers of different political, economic persuasions. We just don't let up on the fiscal stimulus. That's what we hear.
We've seen it repeatedly, though, Lisa, I would say it was a lot more forceful from Governor Brainerd in the last 24 hours. And a real warning, not just about a loss of momentum, but recessionary conditions becoming entrenched. They're really strong words.
Yeah, well, and I think underlying this is the idea that monetary support cannot spur growth at this point without fiscal support. That basically the Fed may be close to out of tools, pushing on a string after stimulating as much as they have already.
The debate continues down in D.C. It's Lisa's favorite conversation.
Love
the
it.
never-ending fiscal story. 2 weeks to go. I mean,
Brexit,
Tom,
maybe?
48-hour deadline. What happened to it? Let's just avoid Brexit, please. What happened to the 48-hour deadline? I just don't.
They're arguing, McConnell and Pelosi are arguing over fishing rights.
Can you imagine, Tom? I would love that if we could just blend Brexit and fiscal negotiations.
We're trying.
From London and New York. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty
extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I think at this point, we're probably underpricing the likelihood that you get that protracted contested election. And we're also pricing a tail event, which is that Trump actually wins the election. Obviously, the polls say that those are less likely. But remember, those tails have become fatter in 2020 than I would say in other years.
Amy Wish Silverman of RBC Capital Markets. Ahead of the election, less than 2 weeks to go, from London and New York this morning. Good morning. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. Here's the price action this Thursday morning. We shape up as follows. In New York, futures are negative by around about 5. We bounce off the lows, down a little more than 1/10%. In the bond market, just a little bit of a bit at the long end. Firmer Treasury market on 10s, 30s, yields lower by a basis point. 0.81% is your yield on a 10-year. Through G10, talked about this through the morning already, through the last 30 minutes. It's been about dollar weakness recently. Biggest dollar strength today through the bulk of the majors, including against the euro. Euro-dollar, Tom, 118 at around about 40.
Let's do the politics under the markets here right now. This is an important conversation. Jeannie Zaino is Bloomberg contributor with Iona College as well. Look for her book Brutal out this fall. Jeannie, what I find so important here is to follow one person and see how they ebb and flow. Greg Villiers has been absolutely remarkable about looking for Trump to do better and then making clear in his morning note the president has botched it. And that right now, into this debate, Mr. Biden has some very nice headwinds helping him out, tailwinds, I should say, helping him out in Pennsylvania, in other places. What is the tail distribution now of Pennsylvania and other key states for the president?
You know, it does look very good for Joe Biden, but of course we always have to be cautious because it looked almost equally as good in some respects for Hillary Clinton. And I think the real states to watch here are Florida, for instance. If Florida goes Biden and they're within a margin of error in most polls in Florida, then this thing is over for President Trump. But if President Trump wins Florida and he can hold that Sun Belt, and he gets one of those 3 Midwestern states, Pennsylvania, Wisconsin, Michigan, then he can take this again. They were all within 1% last time. If he can squeak out one of those, they think most likely Pennsylvania, then he can take this again. So there's a lot of uncertainty out there at this point, and I don't think anybody can predict. I certainly wouldn't predict what the outcome is going to be in 13 days or whenever, of course, we get these ballots counted.
Jeannie, there's just no comfort whatsoever around the polls. We've seen this on repeat, this movie about 50 times over the last few weeks. Every time I say a poll, someone returns the message to me and just says, but yeah, 2016, Hillary Clinton. What's the big difference between now and the final run-up into this election and 2016?
Well, number one is a pandemic. We've never had a presidential election during a pandemic. And it's always difficult, to your point, to predict voter turnout, but trying to predict it in a pandemic when we've got now mail-in ballots, early voting in these, enormous numbers. And it's not just in the U.S. that polling has been like this for the last decade. It's difficult. We saw it in Brexit. We've seen it in Israel. We've seen it in the United States, across the world. Pollsters have a tough job. They didn't do a bad job in 2016, but the fact is these are all within a margin of error. When you've got a close election like we had in 2016 and likely have now, it makes prediction really, really tough. And let's not forget, things can change as early as tonight if this debate brings up something that we don't expect out of President Trump or Joe Biden.
Meanwhile, Jeannie, both campaigns are assembling a war chest of lawyers to contest the election after the fact. Yesterday, we saw John Ratcliffe come out and talk about foreign interference. How much closer does this move us to having a viable argument for a contested election that could draw out for a long period of time?
I think it does move us closer. And again, it's going to depend on what happens on November 3rd in states, particularly like Florida. But if President Trump wins Florida and we see this thing go down within really small margins in some of these other states, we're going to see litigation like we've never seen before. And I was just talking to many people involved for years with elections who say now it's no longer about polling, not even as much about money. It's all about litigation. This thing probably goes to the courts. And that's a big change in the strongest democracy in the world, to think that this election could be decided as 2000 was in a court in this land. Big, big change.
Professor Zana, thank you so much, and look for her coverage with us today and tonight as the debate is in Nashville. Right now, taking this politics and shifting to the markets worldwide, Marcus Ashworth joins us. We're thrilled he could attend today with Bloomberg Opinion. Marcus, the market is looking for a bid. Is politics a catalyst to find a bid, or is it more traditional investment and finance matters?
Hi, Tom. We're in this interesting cleft whereby theoretically a Biden win is both bad for the dollar and indeed bad for U.S. Treasury yields, as in U.S. Treasury yields, and that's why they're inching up. But we know a contested election is disastrous for the dollar, even more so, and would cause a massive flight to quality into U.S. Treasuries. So the market doesn't know which way to turn yet, because it's expecting a big stimulus package, it's expecting increasingly a Biden presidency, both of which should push yields up and the dollar down, but we just don't know this flip card of a contested election could upend everything.
Marcus, it's horse and cart Thursday. Is dollar direction the horse or the cart?
Well, I think it's one of these things that it's neither at the moment, but it very much quickly it comes the horse always. And that's the one thing you have to follow. The dollar direction will set everything, and everything else will follow if it becomes an important game changer. At the moment, it's happy being the cart, but it will very quickly become the horse.
Marcus, we've got to bring Europe into this conversation. It just looks terrible right now relative to the recovery in China, and really not good relative to the momentum in the United States. What's going on, Marcus?
Well, I mean, look, it isn't great by any stretch of imagination across all of Europe, UK, and across all the areas, even Germany, which was doing pretty well beforehand. However, I think that we're seeing the worst of it at the moment, and I do believe that things are under control much more this time around, and we will get a handle on this. There's no doubt about it, a bit of a rush into bond markets, flight to quality, but the one key thing that the European Union has is that a hugely successful bond sale earlier this week, which shows that there is demand and acceptance of them able to fund the recovery and the pandemic recovery from it. Does that equal economic growth? Of course it doesn't. But at least it doesn't mean political panic and collapsing and a mispriced fiscal monetary balance. We're getting noises in the ECB they're going to do more in December. Everyone expects that. Again, the Bank of England will do something in November as well. So we're in a bad place, but not as bad as we were perhaps in, say, March, April.
Sure, it's an important distinction. Let's talk about it. We're not talking about breakup risk in the Eurozone. We're talking about stagnation, negative 60 basis points on a 10-year yield in Germany. Big topic on this program this week has been the sell-off in treasuries. Marcus, the limits of that treasury sell-off, walk me through it, given where bunds are, given where JGBs are, given where most of Europe is priced at the moment.
Okay, well, let's completely separate where bunds are, which is purely down to ECB buying all of them. And so there's absolutely no free float, and it's weird how the last month or 2 months that U.S. Treasury yields have gone up and German bund yields have gone down. That is down to one factor, the European Central Bank buying bunds. So the fact that EU's coming in issuing now with such strong demand shows you how fed up investors are of super low bund yields. So that's just a technical factor. U.S. Treasury yields, as I said earlier, they're up because they know a fiscal package is coming. That's not great for increased issuance. They know a Biden administration is more than likely on its way. Again, that expects a far bigger issuance of U.S. Treasuries down the road. So they're inching up, but as I said, the thing that's keeping them down at the moment is they know the Fed won't let yields go out of control, and they know, of course, if there were to be the worst-case scenario of a contested election, it's going to, mass scramble into U.S. Treasury yields, pushing them right down. So everyone's edging tentatively here. There's no clear direction, and I think that's going to be the state for the next 3 or 4 weeks at least.
Marcus, how much does U.S. stimulus matter for European markets?
You know, it's one of these referred things. The answer really is hugely, because where the U.S. goes, we all follow. And as I mentioned before, the dollar is the real lead on this, and that's what pushes sterling around, pushes even the euro around. So it's hugely important. And if you do get this, it will be dollar negative, and that's probably very good for the rest of the world. But it's a referred second order benefit. But yeah, I mean, it's one of these things, not instantly, but it just confers lovely warmth and glow. And as John's pointing out, the weakness in the European economy, it will probably get a bigger boost from a U.S. stimulus package than anything it could do itself.
Amazing. Marcus, great to catch up, sir. Marcus Ashworth of Bloomberg Opinion. Tom, that's the story. The positive spillover for the rest of the world. Not the United States and the lift that you could get in the U.S. off the back of a fiscal package, but what would happen in European markets? What would happen elsewhere?
Well, it would cut both ways. We'll just have to see. I think the key word you're going to hear from a Biden administration, if we get there, is this word normalcy, which, of course, has a heritage, John, across America going back really 200 years. That'll be the tone of normalcy. But then what do you get with the second Trump term? I think there's been much less discussion about that because tonight we'll be listening for any kind of second-term vision from President Trump. His critics have said it's not there.
On the path to getting back to normal. We'll continue the conversation up next. Jason Farley, Johns Hopkins nursing professor from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Seen on Bloomberg TV, this is Bloomberg Surveillance.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg First Word News. Some of President Trump's advisors are urging him to change his tactics before tonight's final presidential debate in Nashville. They're said to have told him to trade his aggressive demeanor for a lower key style. It's not clear what he'll do when he faces Joe Biden. The president trails in the polls, and the debate is one of the last high-profile chances for him to turn things around. And former President Obama has made his first in-person campaign appearance for Joe Biden. He ripped into President Trump at an event in Philadelphia.
I get that this president wants full credit for the economy he inherited and zero blame for the pandemic that he ignored. But you know what? The job doesn't work that way. Tweeting at the television doesn't fix things.
The former president will campaign for Biden in Florida on Saturday and next week. The top U.S. spy chief is accusing Iran of meddling in the presidential election. Director of National Intelligence John Ratcliffe says the Islamic Republic faked a series of intimidating messages to Democratic voters. He said both Iran and Russia have obtained voter registration information, and Tehran is already using it. And Europe is bracing for a surge of coronavirus cases to hit hospitals. But authorities are worried they don't have enough trained medical staff to handle it. During the first wave of the pandemic, clinics came up with spare beds, and governments pushed manufacturers to make ventilators and face masks. Still, a shortage of doctors, nurses, and technicians is putting healthcare services to the test. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
London and New York for our audience worldwide. Good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away today. Tom, just want to check in on the stock of Tesla very, very quickly. The stock is positive by a little more than 5% in early trading. Decent numbers in earnings after the bout yesterday. This from Dan Ives of Wedbush. Here's a call. The bull case is now $800 a share. I'll catch up with Dan Ives a little bit later this morning. But Tom Keane, quite a call from Dan Ives.
I'm looking for an entry point.
Right now, 445. I think you might have missed it. I think you might have missed it this year.
No, my entry point, trust me, 795 is my entry point.
795?
Yeah, that's
when you go in, point. Everyone gets out.
I'm looking at 100 shares there. He's a big spender. We'll see that. Mr. Ives moving the discussion forward. Maybe John will speak about all those tech earnings coming up next week as well. Right now, this is a really, really important conversation. Jason Farley does nursing, where he's professor at Johns Hopkins University. He is in the absolute trenches of the care of infectious disease, and particularly the cost that we've seen for doctors and nurses on the front lines. Jason Farley today on something less spoken of, which is not there's cases and there are deaths, but there are people that get better. Jason Farley, I really want to talk to you about the lingering effects of this virus. Is it tangible? Is that fatigue genuine?
Well, good morning, Tom. So absolutely, we're seeing continued emerging data. There was a recent publication in the Journal of the American Medical Association, highly respected journal, showing that they followed patients after their initial onset of symptoms for up to 2 months after they initially became sick. And they found that patients' fatigue was the most common symptom, but they also had lingering symptoms from their respiratory system, so cough and some difficulty breathing at times. Some patients, although a smaller proportion, less than 20%, still had problems with taste and smell. So I think we definitely are seeing some subgroups of people who have longer symptoms.
Jason, just to add to that, what have we learned about reinfection?
Yeah, we continue to see cases of small numbers of cases, let's be clear, but small numbers of cases of patients who we've identified have recovered from the infection and have a documented negative test, in some of the cases repeatedly negative, and then have subsequently developed coronavirus again. It was always within the realm of possibility. We talked about it on this show and in others, that would possibly occur. And now we're just seeing small numbers of cases where that information is growing.
Jason, what's the latest on the infectiousness of children? Initially, there was a theory that perhaps they were not infectious. Those of us who have children said that can't possibly be, since they are vectors of disease. Now the idea is that they can spread the virus. How are we looking in terms of how they compare with the degree of spreading it versus adults?
Yeah, so, well, there are a couple of points there. So in terms of how good a child is at spreading compared to an adult, really they have as equal a probability of transmission depending on their viral load and how much virus they have, and then how much contact they have. So that's the first thing. We were wrong initially about them being less spreaders. With certain infectious diseases, with small kids in particular, like the really little ones, their cough is a little weaker. It's not as forceful. So you would think of, if you think of Pigpen and the cloud of dust that goes around them, that cloud of dust around the children is a little smaller than around adults. So there's some data to support that they may be able to spread aerosols a little less far. But overall, they carry a similar amount of virus and therefore are as equally infectious as their adult counterparts or family.
Jason, just to round out the interview, let's try and finish on a positive note. The improvement in therapeutics, we're all looking at the case count, we're looking at hospitalizations again. Jason, walk me through therapeutics. How much has improved over the last 6 months or so?
Yeah, so right now we've got, definitely a glimmer of hope. So most of the world is now using remdesivir with or without dexamethasone. So with those two agents, and it all depends on whether or not you need ventilation or oxygenation, and that's how the recommendations around the world are moving forward. People who need oxygen get dexamethasone or remdesivir, and then people who need mechanical ventilation likely get both. There was a recent study that just came out from the WHO that's still under peer review that calls to question, again, the mortality benefit, the death benefit of remdesivir. But we had already had good data that showed that remdesivir did not reduce death, it reduced symptom burden. So again, another study that seems to be similar to what we already know. So what we're seeing is cases of patients having greater access to these treatments, which is also going to help us reduce ultimately the mortality level as we can scale up these interventions.
Jason, great to catch up this morning. Thanks for giving us some of your time. Jason Fowley there of Johns Hopkins. Some headlines crossing the Bloomberg terminal coming from the British Chancellor, Rishi Sunak, speaking in the House of Commons right now, saying the following. It's clear the open businesses require further support. He announces even more support measures for businesses. This for the Tier 2 restrictions, the areas in Tier 2, which of course includes London. The latest from the Chancellor is that they're making the job support scheme a little bit more generous, raising the job support aid and cutting the contributions from employers. So that's the latest from the House of Commons. Much more on that still to come from London and New York. Good morning to you all. This is Bloomberg Surveillance.
And self-employed people are the dynamic entrepreneurial heart of our economy, and this government is on their side.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. It was a fifth straight quarter of profits for Tesla. The electric car maker easily beat Wall Street estimates, and the company says it's on track to deliver 500,000 cars this year. CEO Elon Musk is now looking at costs.
I do not think we lack for desire for our products, but we do lack for affordability. And so we have to improve the affordability of our products so they are not out of reach of people. We want to bring them more in reach over time, but also improve our cost of production.
Shares of Tesla are up more than 400% this year. Apollo Global Management is facing a client revolt over co-founder Leon Black's ties with sex offender Jeffrey Epstein. Bloomberg's learned that investor consultant Cambridge Associates may stop recommending Apollo. Black has said he had professional ties to Epstein. Epstein was found dead in his jail cell last year whilst awaiting trial on sex trafficking charges. And that is your latest Bloomberg Business Flash. John?
Ritika, thank you. Thank you very much. Here's your price action this Thursday morning. Alongside Lisa Bravitz, I'm Jonathan Ferro. Equity futures are down about 6 points, down 0.2%. I would love to get the Tom Keene cam up just to see what he does in this little break. Really? Where he doesn't participate, Lisa. What does he do in this little break? Does anyone know? Just a camera to follow him around.
He watches Emily in
when
Paris.
He takes that 2-minute break.
He catches up on his... Oh, wow, look at that.
Oh, he takes a nap. He actually takes a nap.
There he is.
I don't think he can... He doesn't know. He actually takes a nap. That's wonderful. Does he just wake up in a couple of minutes and have a coffee and get ready to go again? Maybe. Well, that was fascinating to actually find out what he does do. He takes a nap. That was a real live shot of Tom sleeping.
That was.
Equity futures down 5 on the S&P 500. Lisa, in the bond market, the limits of the sell-off in treasuries. Big question for a lot of people through this week.
A lot of people looking at the self-fulfilling prophecy, the idea that if yields get too high, there is a belief in bond markets that the Fed will eventually step in to cap yields. Some people saying it's as if the Fed has already implemented yield curve control without having to do anything, John.
Much more still to come on that with Mike Parr of BlackRock, and hopefully Tom Keene is awake in about 4 minutes.
He's waking up.
Do I really hope? Maybe he'll just sleep through the next 2 hours. This is Bloomberg.
the pandemic, big companies have maintained easy access to financing, but small businesses and consumers are finding it much harder.
There's certainly a large part of the economy that's not being seen by the banking system.
I'm Shanali Bassick. Join me for a Bloomberg special report, The Credit Disconnect, this weekend on Bloomberg Television.
People talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time.
It's not clear how exactly you get people out and spend the money and get the economy going.
The market is not as well prepared as it normally is for these kind of downside events.
Central banks and governments are in this together. They're one wallet.
This is a market that's thinking at some point stimulus is going to happen.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures down 6. We're negative 0.2%. Counting you down to a debate in Nashville, Tennessee, Tom Keene.
It's going to be exciting in Nashville tonight. Some real back and forth, some news flow. We've got all that for you in the hour, the issues of Iran and Russia and the rest. But, John, the singular issue here is the dynamics of the sum condition of the polls. And I'll be honest, I'm confused. I got people saying it's gone better for Mr. Biden in the last 12 to 18 hours. I've got others saying Mr. Trump has done better over the last 2, 3, or 4 days. That all coalesces to Belmont University tonight.
There's one thing we haven't mentioned in the last 60 minutes, and I'm going to mention it right now, Tom Keene. Nashville, one of us out of the 3 has actually played and entertained an audience on the guitar with a microphone down in Nashville.
Well, let me set that up for you. John,
Nobody thinks it was me.
No, it was Lisa, long ago and far away. Let me set this up for you. This is at Belmont University, which is a Christian school, but then has been disaffiliated a little bit from those history points. It is a spectacular music program that the 2 candidates descend on. And what's important is not so much the distance to the Ryman Auditorium, the distance to the Grand Ole Opry, which is now outside of Nashville, or even the distance to the acclaimed Bluebird Cafe. Kevin Cirilli is 2 blocks from the Pancake Pantry, and that's all that matters.
That was the perfect, what do you call it? Segui, to get away from what you don't want to talk about. Futures down 6. One thing we haven't talked about, aside from the fact that Tom has played in Nashville once upon a time, the data, Lisa, 90 minutes away, jobless claims, got to be a big focus of the morning.
Indeed, although before I get to that, I will just say, if you want Tom Keene to come to set with a guitar to reprieve his experience in Nashville, Tennessee.
I've been asking forever.
At Tom Keene.
I've been asking forever.
On Twitter, send him a love note, and maybe we can make it happen. All right, let's take a look at the data. 8:30 a.m., we are going to be getting those U.S. initial jobless claims. The expectation here is deceleration in the recovery. We are expecting the number of total unemployment filings to come down slightly from last week, but still at an incredibly high level and sticking right there, which raises questions, again, about fiscal stimulus, which we can talk a lot about, John and Tom. Meanwhile, 9 a.m., Senate Judiciary Committee is voting on a time frame for confirming Amy Coney Barrett to the Supreme Court. This is what they're talking about. What they are not talking about getting done before the election so much, at least this seems to be lacking conviction, is getting a fiscal support bill through Congress. And then 9 p.m., there is going to be a debate. I believe you guys are familiar with it, the final U.S. presidential debate. And we will be talking all about the mute button tomorrow, John.
We will, and I'll be using it repeatedly, I'm sure, through the morning with a certain Tom Keene if he starts to sing like that again. Tom, Lisa mentioned it, the Supreme Court confirmation of Amy Coney Barrett. That is where the focus has been in the Senate, not on fiscal stimulus. And you already get a feeling that the blame game is starting between the administration and Speaker Pelosi.
Yeah, there's no question about that. We'll see where the stimulus goes. I thought Wendy Schiller of Brown University, John, just to pause for a moment, was absolutely brilliant yesterday about talking about how beleaguered Republicans are really playing to a tough primary season 2 years hence. There's a lot of cross currents here away from just the simplicity of the moment.
Well, let's plug the moment into the price action of the moment. This Thursday morning, equity futures are negative. We're down 7 on the S&P. We're negative 0.2% in the bond market. Bid through much of the week. In fact, on offer through much of the week. Bid comes back in this morning. Yields down by about a basis point to 0.81%. In foreign exchange, just a 180. You turn it all around again, just like the bond market. Dollar weakness, dollar strength. That's this morning. Euro dollar down to 118.23, Tom. Kind of the story of the morning so far. Just a little bit of risk aversion with some dollar strength. The bond market bid and equities just a little bit heavy, down 8.
Yeah, I go with that. I mean, gold is really on sheer off of the $20 pop from just under $1,900 the ounce. It's just what it is. It's in the middle here. Maybe claims here at the 830 mark does an adjustment here, either good or bad.
Mike Powell joining us now, BlackRock Investment Institute Global Chief Investment Strategist. Mike, fantastic to catch up with you, sir. The guide for you, does a market participant stay up and watch this debate, trade on it off the back of it, based on who you think won? How do you go through this, Mike? What's the process?
So one of the things we've been saying throughout the election season is just how stable the polls have been, even in the face of obviously historic events in 2020 in the United States. And so I think as it relates to your question, yes, insofar as it's one of the last big events before the presidential election, it could matter. But our basic thesis is that this race continues to look awfully stable. And our advice to investors is, look through any volatility that the race itself generates. Look to the long term, look to the fundamentals, and add to high conviction positions if you do see that volatility.
Mike Powell, you were weaned on Blanchflower economics at Dartmouth College, and just a simple idea of wage dynamics and the separation of societies, which is known, and not only what Danny Blanchflower has done, but others at Dartmouth economics. How divided is this nation now, and what does it mean for investors?
So, I'd say the nation, does look divided across a couple of dimensions. Obviously, the political polarization is at historic highs. But I think as well, when we talk about economics, when we talk about markets, I know we've talked a lot about the K-shaped nature of the recovery and the degree to which, even in aggregate, as the economy is surprised to the upside, that's a much different experience for people in different parts of this economy. And I think that's why, as we look ahead, this question, as you've raised around fiscal stimulus, this question of is the recovery going to become more sustained is going to be an awful big part of the market narrative as we go into 2021.
Mike, a lot of people are believing in this yield curve steepening story, higher longer-term yields, based on this idea that we will get some sort of fiscal support bill, perhaps this year, definitely next year. How high can 10-year yields really rise before the Fed steps in?
We think this is a huge issue, and I would say our view on it is perhaps a little distinct. I mean, I think we heard from Governor Brainerd yesterday that the Fed intends to act along the entire yield curve. We see that as a signal of exactly that the Fed is going to be pretty closely watching the nominal curve and not allowing a tremendous amount of steepening. To us, the kind of more compelling reflation dynamic is to expect to see the nominal curve stay more or less stable to a little higher, but real rates tips to rally even more considerably. So real rates even more negative, and that has pretty important implications for the dollar, for risk assets globally. So we think that's the really important dynamic here.
Well, Mike, that makes it profoundly difficult to own financials, and it makes it even easier to stick with what's working right now. What do you say back to the people that are talking up the rotation in the equity market in America?
So I'd say two things. And I think we have been talking about a type of rotation in the market, but it's been less growth to value and more large to small. We do think that the growth dynamics that a reflationary fiscal stimulus type path could bring about that type of rotation, but agree with you that, in a world where we see real rates lower, when we see the path of the dollar potentially lower as well, that's also a pretty attractive world for equities outside of the United States, risk assets outside of the United States, including places like emerging markets.
So I'm looking right now, the low of negative real yields for 10-year treasuries. In other words, the amount of money you're losing to invest in longer-term treasuries based on the rate of inflation hit a record negative 0.11% in September. How low could this go?
Well, I don't want to put any precise numbers on it, but I do think the important point is if you look at places that have combined kind of significant ongoing monetary accommodation plus fiscal policy, that the place where that has really manifested itself is in real rates. I mean, this is what we saw in Japan. This is what we've seen in other places that have brought this combination to bear. And I think that's where we see the pressure from those two forces coming together in policy really manifesting itself in markets.
Mike Powell from BlackRock. Mike, just fantastic to catch up as always. Joining us from the BlackRock Investment Institute. Tom, if we have negative real rates that go even more negative, how do you plug that into the rest of this market? How does that shape your view, not just over the next couple of months, but over the next few years?
It changes everything, and I thought that Peter Shafrick was brilliant this morning from RBC Capital Markets, laying out the money market fund impact. And John, he made a huge divergence between the U.S. that would be clobbered by negative interest rates versus a United Kingdom that could possibly withstand it. To be clear, he predicts negative interest rates for Britain.
Wasn't that a description of yield curve control that we just got from Mike Powell, though? Your favorite topic, Tom? Governor Brainer's talked about it. Mester's talked about it at the Cleveland Fed, that they'll go further out along the curve, just sit on it.
Well, I'll go mathy like Mester. Is it an outcome or is it a policy? And I think that's a fascinating question right now. Do you get yield curve control after policy or non-policy? Or do you affect yield curve control and then get the policy and get the market reaction? It's a modest debate.
Well, Lisa, that debate's happening right now, and some people think it's already here.
Yeah, well, you're looking at, for example, the Fed balance sheet. I always watch for it at 4 p.m., 4:30 p.m., I believe. On Thursdays, it comes out with the latest. Last week, it rose the most since May. And you can see still not necessarily coming in size to the degree of soaking up all of the extra treasuries, and yet there still is a bid. My question is, what are the longer-term implications for investors, right? Can you be bearish on the economy and bullish on equities, bullish on credit, simply because of the amount of liquidity being driven into these assets because you are getting, you're basically getting fined to go into anything else? And John, what does that do to the economy? What does that do to productivity? This is what I'm struggling with right now.
Lisa Abramowitz, 4:30 on Thursdays. Tom Keene, I think we know what all the bears do at 4:30 on Thursdays.
They do.
They wait to see how big the Fed balance sheet is.
Hold on a second. I represent all bears right now, but I'm saying...
Yeah, I think that's probably what all the bears do at 4:30 on a Thursday. I'm sure you get on a Zoom call.
That's my life. It's really exciting. Emily in Paris and Fed balance sheet reports.
Builds up to Thursdays at 4:30 with Lisa Abramowitz and Tom Keene. I'm Jonathan Ferro. Ping Lisa a message at 4:30. You know what Lisa will be doing? She'll be looking at the Fed's balance sheet. Coming up, Robert Tipp, PGIM Chief Investment Strategist from London and New York, with the eyes of the world, really, on the nation's capital, Washington, D.C. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The second and final presidential debate is tonight in Nashville. It's one of the final high-profile chances for President Trump to change the narrative of the campaign. Polls show him losing to Joe Biden. Debate rules have changed. A candidate's microphone will be muted at times when the other candidate is speaking. The president has complained that this is unfair. He says the same thing about the choice of topics and the moderator, NBC's Kristen Welker. Democrats on the Senate Judiciary Committee plan to show their unhappiness with the Supreme Court, Amy Coney Barrett. They will boycott today's vote to advance the nomination to the full Senate. Republicans have a majority on the panel, so the move won't prevent the nomination from moving ahead. And in the UK, Chancellor of the Exchequer Rishi Sunak has unveiled another bailout for businesses hurt by the coronavirus. The latest package is aimed at pubs and restaurants struggling under the UK's Tier 2 lockdown. The UK also raised job support aid, cutting employers' contributions. It was a fifth straight quarter of profits for Tesla. The electric car maker easily beat Wall Street estimates, and the company says it's on track to deliver 500,000 cars this year. The earnings streak could add momentum for Tesla's inclusion into the S&P 500 index. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We have confirmed that some voter registration information has been obtained by Iran and separately by Russia. This data can be used by foreign actors to attempt to communicate false information to registered voters.
That came from John Ratcliffe, Director of National Intelligence, yesterday evening, going into the final debate later this evening in Nashville, Tennessee. Here's the price action of the moment, a couple of hours away from the opening bell in New York City. Equity futures shaping up as follows on the S&P 500. We are negative. We're down 6. We're off by around about 0.2%. In the FX market, euro dollar 118.27. That is a stronger dollar in the mix this morning. That risk aversion spilling into the bond market with yields lower by a basis point, Tom, to about 0.81% on a 10-year.
Yeah, there's no question about it. The data's there. John, what do you see in the data coming off of jobless claims?
I think we've got to look out to see whether we continue to lose that momentum, Tom.
Yeah.
We've seen it stall. We've seen it stall quite clearly in jobless claims, and I think there's a worry that it stalls going into the winter, just as the case count starts to pick up in the United States of America, which whether we lock down, shut down, restrict movement, whatever in the United States, it could lead to consumers to disengage and for companies to lose confidence, and that's not what you want at this stage of the recovery.
Yeah, absolutely. There's no question about that. And I'll be looking at the revisions on claims. If you were Brad Paisley, the country giant, you would have wandered as a student at Belmont University, where he was the best guitar player on the planet, down to the Pancake Pantry. It is iconic nationwide. It's one of the great morning moments. Kevin Cirilli will be there after this discussion to get the pigs in the blanket, $1.03 more than the standard fare. Kevin, if these two candidates were to shake hands in the endless line outside the Pancake Pantry on 21st Street, how would they both be greeted today?
Well, look, I mean, this is a deeply conservative state. I mean, and quite honestly, I think it's really indicative of the type of state for why Leader McConnell is reticent to pass a $1 trillion plus stimulus plan back on Capitol Hill. But tonight at the debate, front and center, geopolitics and some bubbling over issues that are carrying us into tonight's debate. First and foremost, Director of National Intelligence John Ratcliffe's hastily put together press conference yesterday ahead of news reports that Iran and Russia have hacked into, via cyber, hacked into voter registration. This is no doubt going to come up, I'm told, by the Biden campaign. Go ahead.
No, Kevin, I don't mean to interrupt, but the news flow is extraordinary. As you know, on the papers today, the president is upset at his attorney general. He's upset at his FBI director. Is he going to translate that over to a discussion of foreign policy and, frankly, his success in the Middle East? Or is this going to be the Hunter Biden debate?
Well, look, I think it's going to be a little bit of both. It's going to be an opportunity for the president to discuss his success with Jared Kushner and their geopolitical advances in the Middle East. But I also think that you are going to see the president try to raise new questions against Joe Biden as it relates to his family's relationship with the Ukraine. This is a polarizing time, to put it mildly, and a tale of two geopolitical narratives. From the longer-term sense, this is an opportunity for Republicans to raise questions about the Democratic Party and arguably the standard bearer of it in the future for the short-term relationship with Russia and China. For the Democrats, look for Joe Biden to say that the Trump administration has not done enough to better protect the integrity of U.S. elections from hostile foreign actors.
Kevin, I think it's easy to forget, given what's happened in just the last month alone, how much these polls have moved since that last debate. If you just look at the recent polls that are coming out at the moment, that Quinnipiac poll that has Texas tied had the president with a 5-point lead a month ago. Iowa, almost a tie according to the latest Monmouth University poll. A month ago, back in September, that was a 6-point lead for the president. Kevin, quite clearly what happened since then is he's lost ground even more so with suburban females and seniors. What can he say to those two group of individuals in America tonight?
Well, three things. First and foremost, the expectations are so low for President Trump that he has a much lower bar to clear over the nominee Biden. Secondly, as it relates to the incredibly close polls that you referenced in Texas and Iowa, where Senator Joni Ernst had a major political gaffe as it relates to soybeans against Democratic challenger Teresa Greenfield in a recent debate, only points to this notion of why Democrats feel emboldened that they are on the cusp of a blue wave. Biden has the opportunity tonight to further embolden them. However, yesterday, the third point I would make here, yesterday I spoke with Democratic National Committee Chairman Tom Perez, and I asked him point blank, I said, Mr. Chairman, what keeps you up at night? He said Florida, he said Michigan, he said Wisconsin, because they remember, Jonathan, 2016, feeling like they were on the cusp of another victory. When you have 40 million Americans that have already cast their ballots, that never happened before. And so it's difficult to even predict who those 40 million are or precisely who they are going to have voted for.
On a practical note, Kevin, what are the protocol being adopted tonight to protect the candidates, particularly Joe Biden, since he hasn't had the virus, from getting infected? Do we have a sense of whether people are getting tested? Masks, will they be mandatory?
Yes, precisely. It's a continuation that the debate commission has done from the last debate. Masks mandatory, rapid testing, key testing. Both of the candidates have said that they have had regular testing, and they've been. The Biden campaign has been putting out press releases virtually around the clock as their test results have come. The president, for his part, has said that he gets regularly tested. You'll remember that vice presidential nominee Kamala Harris' staff had two staffers had been diagnosed with COVID-19 since recovering. She says that she was not in contact with them and that has put out statements that she has tested negatively for COVID-19 since.
Kevin, just before we let you go, just a final question on COVID-19. The First Lady, how is she doing and will she be there this evening?
First Lady Melania Trump is said to have a lingering cough, according to a statement from her office, and there has been some questions in reports that have recently surfaced about whether or not she will attend any political rally. She was set to introduce President Trump at a Pennsylvania rally earlier this week. Due to that lingering cough, her staff says out of a wide range of precautions, she sat that one out. We'll see if we see the First Lady in the lead up until Election Day.
Kevin, thank you, sir. Always great to catch up.
The
Go and get your pancakes.
Kevin,
I know.
the pecan
Look how
pancakes.
excited he is.
Pecan?
He's not there anymore, Tom.
Pecan pancakes.
He's gone.
Pecan.
Yeah, 5.
Yeah, this is a Tom
right.
King
Pecan
thing. You not heard this before,
pancakes.
Lisa?
No, but question.
You not heard this?
Butter and syrup, or just syrup, Tom?
Well, it depends. If you're from the Northeast, you go more stark, just syrup as well. But there are noted people there, probably including Cirilli, that do it all in. There's no question about that.
Do you know what confuses me with the pancakes and Americans? The bacon thing. Why add the bacon? What is that about?
Well, we have the bacon thing, but also,
Protein.
as I said, pigs in a blanket where you have sausage in as well.
Protein.
You can go any number of ways.
It's clearly for the
We
protein.
don't have the ugly black
Balanced diet, of
sausage that you
course.
have in a full... What is that thing, John? In a full English, there's this
start that
thing
again.
on the edge of the plate next to the tomatoes. What is that thing?
Oh, the black pudding.
Black pudding, what is that?
We'll talk about it.
Pig's
at the break.
blood, Tom. Pig's blood.
Pig's blood.
Pig's blood.
Not at the pancake
The kind of thing that you don't want to think about. Kind of thing that you don't want to think about in the morning.
but
you
you
might be sitting
question-
down eating breakfast.
You question bacon, though, John.
I still do, on pancakes.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
From London and New York for our audience worldwide, good morning to you all. Alongside Tom Keene and Lisa Bravis, I'm Jonathan Ferro. Here's the price action, 2 hours away from the opening bell, 60 minutes away from jobless claims in America. Equity futures on the S&P, -6, down 0.2%. In the bond market, yields lower by a basis point to 0.81%. Ace Enders writes in, good morning to you, Ace. Thank you for the message. Tom Keene, let's start a band. You sing, obviously. Lisa Bravis on drums.
No, you don't want me to sing.
Clearly.
No,
Ferro seems like he'd be a sick bass player. We'd call it Lisa's Bears.
Oh, yeah.
Think about it. Lisa's Bears, I like that.
I'm thinking about it.
That would be a good band, Tom.
It
You're
would
gonna make a T-shirt.
But Lisa will sing, not I, not moi.
I do a pretty sick air drum rendition, so, you know, I can see that.
this conversation died. Let me get to the FX market very quickly. Dollar lira shaping up as follows. A disappointment from the Turkish Central Bank.
Big one.
Not raising interest rates. Just a huge disappointment from the Turkish Central Bank. The expectation was a hike to 12% from 10.25, and they leave it unchanged, Tom. Dollar lira almost out to 8.
Yeah, this is a movable feast, and this is the gamma, what you hear pros talk about, where it's not, is it moving and what direction it's moving, but the speed of the movement. Is it idiosyncratic? Yeah, I guess it is, John, with all the politics and, the Eastern Mediterranean, Lebanon announcing they're reforming a government today. But, John, it sobers up global Wall Street because they've seen this act before.
It's a reminder of what can happen even if you expect a central bank to go with traditional theory, Tom. We've just seen this repeatedly out of Turkey. Even when it's expected, they get the pushback. And the Turkish president, some would argue, many would argue, has been an individual that's been running the central bank for a while now.
Yeah, there was no question about that, whether it's his family relations or whatever. It's clearly being called by Mr. Erdogan. But I would, John, again, it's the 5, 6, 7 lira per dollar. And now to touch upon 8 lira per dollar would be just absolutely extraordinary. No other way to put it.
Let's get Robert Tipp into the conversation.
Let's bring him, you bring him in, because we're closer. You're closer to the real yield, John. As we get later in the week and closer to the real yield, you should bring in Robert Tipp.
Well, Robert, unfortunately, couldn't join on Friday. And then I said, do you want to join another show? And he said, could I join the Open?
Second choice.
I said, I don't know about that, Robert. What about surveillance? And he's like, oh, really? Really?
Come
and he's with us now. So, Robert,
in.
thank you for doing this for me. I appreciate it. I really do.
All right.
Robert Tipp, your thoughts on Turkey, please.
Yeah, absolutely. Well, I think, we're in a world where sovereigns are generally getting a pass. You're seeing these huge budget deficits, huge debt to GDP ratios, things that would have really given, ratings agencies, investors pause. And so many countries have been just fine with that. We've seen emerging market currencies very strong. But I think there have been 2 prominent examples in the last handful of market days that show that idiosyncratic risk is there. I don't know how many people remember when their colleagues were writing triple-digit tickets on Turkish T-bill yields, but in the last, not that long ago, they came down from above 100% to below 100, and they lopped 6 digits off the lira, which is at $1.5 million. So this country has seen much more rapid depreciation at times. But they have been flying in the face of market norms. They were widely expected to raise rates by over a couple hundred basis points, I would say, today, and they did not do it, and they're being taken to task. The other example, I would say, is the UK. The shot across the bow on Friday that, sovereigns are going to be evaluated in terms of their governance. And so I think the UK getting notched is, that's a country that has not been by any stretch reckless on the fiscal side, that ratings agencies are going to be taking a new approach. And markets here today, you can see, are looking for appropriate responses to a crazy world, and they're not getting it on the rate side today with Turkey.
Robert, bring it back to America. I believe the working number is a $3 trillion deficit. How idiosyncratic is America getting?
Yeah, exactly. So these days, what is a la mode? It is running a gigantic fiscal deficit and making absolutely sure that you meet the gap in earnings shortfall. And in the U.S., we have been doing that. But now as the fiscal stimulus falls short, we're going to be one of the few countries that lets that fall away earlier. And so I think the markets are displeased with that. I think that there's going to be a gap, though. We're seeing a gap in the sense that we're at record retail sales. And so the markets, I think, are shocked at how strong housing has been, how strong autos have been. And so they're, suspending, that fear of an income drop off and a double dip in the U.S. because results have been so strong. But I think that risk is there, that as the stimulus drops off, that you may see a lull in retail sales in the U.S., and you may see it in other countries. So we're in an ironic place where the huge fiscal is a positive for the markets, even if it's recklessly large seeming. And when it falls away, it could be a big disappointment.
Can you build on that, Robert, in terms of a trading strategy, the idea that people could potentially be disappointed with the momentum in the U.S. economy? How long do we have to wait before there's another re-up of fiscal support from the U.S. government before you start getting bearish and start stepping away from riskier assets?
Right. Well, I think the long-term outlook was really positive here, is that we have, in general, sequential growth. We've dropped down to very low levels of production globally, and we're seeing sequential growth, and the bite out of corporate earnings, I think, has been much less than most would have considered, and by a wide margin. So I think looking out 12 to 24 months, disappointment on, say, corporate earnings, the odds of that, they're fairly low. I think you're going to get a sequential recovery. In the short term, though, I'm at a loss to handicap this, but I don't think you're supposed to think you're going to get fiscal stimulus here. It looks very unlikely. You're going to have to wait until after the election, and we're maybe in for a very choppy period, not only until Election Day, but until you get the result and the smooth transition from Election Day, that we could be in for some volatility here before investors go back to, okay, this is the policy we're going to get. We're getting sequential growth and a more normal, positive investment environment.
Rob, that's the market analysis. Let's get to the market call. Are you a buyer at 30s at 160?
Yeah, so I think that we may have short-term weakness here. The markets are nervous. The technical picture is not great. I think, though, that the inflation dynamics are very soft, and central banks around the world are going to be locked down. So I think, as you mentioned last time, we were up at 80 basis point area in tens. I think that's attractive. Could it go up another 20 basis points? It could. But I think that level of yields, that 80 to 100 basis points on tens, is unsustainably high. So I think you're just breaching into the irrational exuberance mode in terms of the Fed's being able to lift off and get to sustainably much higher Fed funds rate. I think they're going to be stuck at low rates. And as that becomes apparent, you will see yields stay in this zone, and 80 basis points may end up being the top of the range for tens, say looking 12 to 18 months out.
So on a portfolio basis, Robert, what is the pressure to go outside full faith and credit and go over to investment grade or even Lisa's dreaded high yield?
Yeah, well, I think that you definitely need to avoid the hot spots, but spreads in many areas, whether you're looking at, CLOs or European peripherals have recently widened out, investment grade corporates, high yield. There are really good spreads there. They're not where they were at the end of last year, and in many cases, they probably should be. So I think that, the equity market valuations are high. They're stretched. Your PEs are high. There's a big leap of faith, I think, on the equity market. Cash balances that investors have are very high, and looking out 12 to 24 months, as becomes apparent, Fed is locked down at zero. You're going to see investors creeping out the risk spectrum, supporting IG, supporting high yield, and that you're going to have strong outperformance from spread product, despite the fact that we've already had a really massive recovery.
Okay, which brings us to 4:30 p.m. today, which is looking at the latest report from the Fed balance sheet. I have a feeling, Robert, I am not alone. I have a feeling you look at this too, right?
Yes, that's very much of interest to us, yeah.
Okay, so how high do you think the balance sheet could get? Right now we're looking at a $7.15 trillion balance sheet. It rose the most since May in last week's report. How much do you expect it to climb, given the expectations of the market, given where valuations are through the end of the year?
Yeah, well, I think that the Fed really is, they're doing a good job, but they're not going anywhere near the rate of like the ECB. So the Fed's pace of accumulation is, say, $1 trillion a year pace, but they're focusing on the front end of the curve. The ECB is going at double that pace. And so, the U.S. market is holding in pretty well, given how low as a percentage of that federal issuance that Tom alluded to, how low those purchases are. So I think the Fed has a lot of upside to accelerate, to buy longer duration, maybe to buy larger size, if and as this economy slows down. But I think they're going to maintain this pace.
Robert, good to hear from you. Good to see you. Robert Tipp there from PGIM. Thank you, sir. Just to update you on a couple of headlines in the last couple of minutes. This comes from the United Kingdom for anyone on Brexit Watch. If you're out there, Prime Minister Johnson and Chancellor Sunak to hold a news conference at 4 p.m. local time. So that's 11 Eastern. Then this from a White House aide, an aide to the president. The White House is optimistic on a stimulus deal. Possibly two of the most frustrating stories to follow in the last couple of weeks, Tom.
I'm speechless. I mean, I really just don't really know what to go with it. I think far more important, John, is in 50 minutes we're going to get claims. That's going to talk about the labor economy of the nation.
Totally agree.
You know, you hope you get off all this silliness where tonight they have a cogent discussion about the capitalism that is prospering in this nation and completely separate from it, all the hardship that we're seeing. Could we even get 2 minutes of debate tonight that actually is policy-based?
Well, you get 2 minutes of speaking without interrupting, Tom. You'll get that multiple times. Every time they start a segment, they'll get 2 minutes each.
You know, they'll get the mute button. They've both gone to Pharaoh training.
Just like that.
The mute button,
Beautiful.
you know, the mute button comes in. Nice, John. I'm glad you did that.
I'm trying, Tom.
You know.
I'm trying. Look, Tom, I don't think it went well for the president last time. Not my opinion. You see it in the polls.
Sure.
Let's see if we get a different approach later this evening. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. Coming up, Emmanuel Rosner, Deutsche Bank analyst, right here on Bloomberg. Heard on Bloomberg Radio, seen on Bloomberg TV. With futures -6, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Some of President Trump's advisors are urging him to change his tactics for tonight's final presidential debate in Nashville. They're said to have told him to trade his aggressive demeanor for a lower-key style. It's not clear what he'll do when he faces Joe Biden. The president trails in the polls, and the debate is one of the last high-profile chances for him to turn things around. Former President Obama has made his first in-person campaign appearance for Joe Biden. He ripped into President Trump at an event in Philadelphia.
I get that this president wants full credit for the economy he inherited and zero blame for the pandemic that he ignored. But you know what? The job doesn't work that way. Tweeting at the television doesn't fix things.
The former president will campaign for Biden in Florida on Saturday and next week. Europe is bracing for a surge of coronavirus cases to hit hospitals, but authorities are worried they don't have enough trained medical staff to handle it. During the first wave of the pandemic, clinics came up with spare beds, and governments pushed manufacturers to make ventilators and face masks. Still, a shortage of doctors, nurses, and technicians is putting healthcare services to the test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them
baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Think we lack for desire for our products, but we do lack for affordability. And so we have to improve the affordability of our products so they are not out of reach of people. We want to bring them more in reach over time, but also improve our cost of production.
Elon Musk there, the Tesla CEO, in a better mood after some decent numbers, with the stock up this morning by around about 5%. In early trading. Elsewhere in the market, we look a little something like this on equity futures on the S&P 500, drifting around in negative territory this Thursday morning, 42 minutes away from initial jobless claims in America, down 6. We're off by 0.2%. Bit into the bond market, just really mild risk aversion. See it reflected in that stronger dollar, euro dollar 118.19, down a third there. And in the bond market, your yield, Tom, about 81 basis points on a 10-year.
Let's get right to it, John. On autos, yes, of course, on Tesla, if you feel it's an auto company, not a technology company as well. Emmanuel Rossner joins us with Deutsche Bank out of a tour of duty at London School of Economics. He has a very financial view and acuity of the numbers across the auto industry. Emmanuel, I want to cut to the chase. They had regulatory credits, this whatever bonus it is for doing electric cars. It came in higher, and it takes your gross margin on Tesla up about 400 basis points from 23% to 27 cents on the dollar. Is that sustainable into the future?
Yeah, good morning. Thanks for having me. So, look, absolutely, the regulatory credits were larger than expected. They've actually been a little bit down from what it was in the last couple of quarters, but certainly larger than expected. We view them as sustainable, at least for a number of years. As you know, in multiple markets, there's this big focus on reducing emissions, and other automakers are struggling with it. The reason it keeps being better than expected is just more automakers knocking at Tesla's door at the end of the quarter and saying, hey, look, we need those credits, they're not to be fine. So I would view it, at least for a few years, certainly not in perpetuity. Having said all that, the gross margin excluding the credit was 23.7%, which was 2 to 3 points better than what us and the street were looking for. So there's incredibly strong underlying cost execution.
I have to say, the business model of Tesla getting its competitors to give it money so that it can invest to take away their business is really genius. There is a question, Dan Ives coming out with a price target of $800 in a bull case for Tesla. Your price target right now, $500. What do you see could drive the gap between $500 and $800 in the months and years ahead?
I think it truly is a timing thing. Essentially, for us, we're thinking about a whole lot of positive catalysts for Tesla, both in the very short, medium, and longer term. the way we value our stock is more based on the midterm. I could certainly see it going towards $800 longer term. The idea right now, I think the big first focus is going to be the U.S. election. In case of a Democratic victory and with a Green New Deal, I think that there's going to be much extension of the federal tax credit, which could give a big boost to Tesla vehicles in the U.S. and I think to the stock as well. 2021 is a huge pivotal year. We value our $500 price target based on 2025 with $15 of earnings, 2 million vehicles sold in that year. That's what it is. If you want to look to 2030, Tesla is essentially talking about 3,000 gigawatt hour of capacity. That's basically would enable to make 40 million vehicles. Tesla will not be selling 40 million vehicles by then. They will be addressing a lot of different end markets. They will be supplying a lot of other automakers. If you want to go all the way there to 2030, there's certainly additional upside besides our price target.
Emmanuel, this stock is up by what, 400% this year? I think the market value now, the market cap is $394 billion US dollars. What do we know on October 22nd that we didn't know January 1st?
I think quite a few things, actually. I think that on the operational execution side, things continue to impress. You know, every skeptic I speak to throughout the quarter points to competitive dynamics. Yes, Tesla was first, but now there's competition coming. A lot of European automakers are having electric vehicles. What is that going to leave for Tesla? Tesla will not be a monopoly forever. When we see Tesla selling every single car they're able to make, they actually are running out of inventory. In Europe, you have to wait 4 months to get your Tesla if you place an order today. There is an actual sort of like supply issue. So they're performing extremely well. They're continuing to, what we have learned is they will aggressively cut prices in order to remain competitive, to make the car affordable, and yet keep beating estimates on price on gross margin. The other thing that we've learned is the long-term trajectory. Now it's pretty clear on the back of Battery Day last month that it's not just about selling vehicles. It's also going to be about much more, because they don't need enough cells for 40 million vehicles. They really want to unlock the other market.
Right.
They confirmed yesterday that the semi is coming next year. Stationary storage, all these opportunities are much more real now than they were maybe at the beginning.
The much more real, Emmanuel, is it's got a lot of cachet. I mean, it's cool to drive a Tesla, and I get the whole story and all that. Everybody else wants in. Are you telling me BMW, Mercedes, Porsche Taycan, and the rest of them, they can't compete with Elon Musk?
No, I don't. I'm not saying this. I think that look, electric vehicle penetration is so small. There is definitely a lot of room, for everybody to grow, quite fast if you have the right technology. What I'm saying is, when you look at the competitive landscape, and the threat of competition has been really the bear case for a long time. Look at what's coming out. It's right now in the US, it's all vehicles at the very high end. GM just unveiled the GMC Hummer EV, spectacular car. The first version, which is coming late next year, starts at $130,000. Their $80,000 version will be in 2024. No one has quite figured out the ability to give a high-performance car at a reasonable enough price while making actually decent margin on it. No one has. And if Tesla is successful with their battery plan, which is to cut the cost of it by 50% over the next 3 years, that lead is going to stay there or potentially even intensify. So I think this is what others haven't really quite figured out. But I do really believe there will be, other companies successful in EVs. I think that just Tesla as a monumental lead.
Emmanuel Rosner, great to catch up, sir. Stock's positive, flying this year.
Thanks for having me.
Joining us from Deutsche Bank. Thank you. Great to catch up. I can confirm just a little bit of scheduling for you. I can bring that confirmation now. Tomorrow morning, 9 Eastern, the White House, the administration, Larry Kudlow, National Economic Council Director, will be stopping by to catch up with me. No doubt Tom Keene, to talk about the fiscal package that we might or might not get before the election. But looking forward to that conversation nevertheless.
John, everybody on board for the dash to the election. I mean, we really can't. You get through the Sunday talk shows, hear those on Bloomberg Radio on Sunday afternoon. And John, you get through Sunday and you're into Monday. I'm sorry, it's a dash. Everyone on board, including the good Mr. Kudlow.
Yeah, and the reaction to the debates as well, Lisa, this evening. Given where the polls have been going, it's the last big chance on a major stage to make it count and make a difference.
Yeah, although something Kevin said really sticks with me. 40 million people have already cast their votes. This election is already in the bag for a lot of Americans, which raises a question of how much momentum President Trump can get from this election should he outperform. And the bar, again, is pretty low, John.
So I think you're dead on, and I keep saying, and many people keep saying it too, 12 days until the election. The election started. It's 12 days until the election finishes.
Yeah.
The election started a number of weeks ago for many millions of Americans. Alongside Lisa Bravis and Tom Keane, I'm Jonathan Ferro. Coming up, Jeff Yu joining us on this program, BNY Mellon's senior strategist. Is that New York? Is that Manhattan?
It's
From
a
a cloudy...
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government. Because there are checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new turn. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterize the first.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on so you can keep on.
People talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time.
It's not clear how exactly you get people out and spend the money and get the economy going.
The market is not as well prepared as it normally is for these kind of downside events.
Central banks and governments
governments are in this together. They're one wallet.
This is a market that's thinking at some point stimulus is going to happen.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. It is a simulcast on television, on radio. We welcome all of you around the world, across this nation. If you are in that odd East Coast October, it is the density of fog. For those of you on radio across Washington up to Boston, drive careful. The fog is never, it's like a London fog, John. It's so bad, it's a London fog. Tell me London is gorgeous.
It's got a London feel. London's always gorgeous. It's beautiful. What else do you want me to say?
Oh, there it is. It's gorgeous. Thank you on Bloomberg Television.
For our listeners on radio.
The picture of St. Paul's, and on radio, it is a tapestry of gorgiosity across the River Thames
Paul's
from
just
Queen.
Piercing that beautiful blue
Queen
sky.
It's just gorgeous as well. That's a postcard John just put up. Okay, we got lots to do this hour. Jeff Hughes is going to be with us in a moment, but I really want to focus away from the market and the data. Futures -3, Dow Futures -23. John, we forget the claims are in this hour, this nation on a labor basis. There's no other definition. It's not an opinion. It's flat on its back. And you bring that over to a debate tonight. Do you think it'll come up?
I think it will come up repeatedly, Tom. Professor Stiglitz at the open of this hour said it perfectly. For the people at the bottom who are really, really struggling, they are really, really struggling. And in the midst of this pandemic, Tom, we said it repeatedly when we were on air. We were the lucky ones. We got to work from home. Many people didn't have the luxury of being able to work from home. And then even when we reopened, many of those companies didn't reopen. And if those companies did, they had to resize the business. And those people have been laid off. And here we are in October still talking about another stimulus package. Why? Because this economy is still not reopened at the point that we can let this economy run on its own in a self-sustaining way. It still needs assistance in the argument of many.
Michael McKee will be with us at 8:30 to give us perspective there on claims. Lisa, all of this folds over to, John mentions Professor Stiglitz, his student, Chair Yellen at Yale University a gazillion years ago. I've never seen her more fired up about stimulus. What's your stimulus update this morning?
Well, this is the question, and I think that what we're hearing from an increasing number of Fed and former Fed officials, including Lael Brainard, as John was highlighting earlier, is increasingly strong language saying we need fiscal. Frankly, lowering interest rates and buying more bonds and possibly, going further into riskier assets isn't going to get money to the lower tier of individuals, of earners, of Americans, of people around the world. Right. People are looking to fiscal, and without that, how long can this recovery be sustained? We'll find out.
Well, we're going to find out. We're going to skip the data check here. Simply 10-year yield 0.81%, pretty much unched here with, again, a little bit of red on the screen. The VIX under 30, 29.11. Jeffrey Yu is with BNY Mellon. He is a senior strategist and is wonderfully eclectic about linking foreign exchange dynamics into everything else that's out there. We're thrilled he could join us right now. Jeff, I want to talk about the persistent stronger renminbi, the Chinese yuan. Is that managed by Beijing, or is that the market speaking?
A bit of both, right now. So Beijing's managing it less. I think that's been clear for the market to see. So the market now is trying to see, okay, you're not managing it. Let's see how far we can push renminbi stronger before you actually start to want to manage it a bit more, because this is getting uncomfortable for China. Rates are still quite high. If you look at where their bond curve is, sure, there are some big activities in terms of the domestic IPO market coming through, but at the end of the day, one strong spot has been exports, right? But a stronger currency that could eat into exports. So the market is going to be testing the PBOC tolerance up ahead.
How does renminbi diffuse, leak, if you will, to the other currencies of the Pacific Rim and indeed over to U.S. dollar?
Well, there's two ways this can happen. One positive, one perhaps less positive. The positive side is stronger renminbi, stronger purchasing power for Chinese, the fabled Chinese consumer that the world desperately needs to come through. Then they have more purchasing power they can spend and lift the economy around them. However, if China actually starts to get worried about this and starts to push back, starts to intervene, then Korea, Japan, Taiwan, they're going to get nervous as well. We don't want a localized currency war. But for the time being, I think the renminbi is giving everyone else a lot of space, especially Korea. That's one where I think the market is quite fond of as well.
So, Jeff, it comes down to tolerance. Let's talk about levels. Dollar China, 668 right now. We saw 664 earlier in the session. What kind of level do you have in mind?
Well, I think when we get to, say, 650, that kind of a level, the PBOC may need to take a double take. But let's go back to 2014, 2015. When did the PBOC really start to talk down the renminbi? When talk about it being, quote unquote, fair valued? That is the key phrase from Yi Gang, who is now the governor. There we were heading towards 610. People were talking about it breaking 6 and heading into 5. Nowhere near there yet. All the PBOC leadership, they were on the wires yesterday. No one uttered a single syllable about the renminbi. So it's telling you these levels right now, they're happy with it to continue to advance.
Down to 650 then, Jeff. Let's build on this. The derivatives of this trade, stronger China, stronger currency. People have been loading up on copper, bidding up the copper price. Out of those trades that have been attached to that stronger Chinese currency, what do you think is vulnerable at the moment, Jeff?
So from a positioning point of view, we've already seen the Aussie adjust a bit, right? So, but for copper, so for Chilean peso, for Aussie dollar, I actually think in particular Aussie is not that vulnerable. I would like it to actually move forward a bit after the RBA figures out its policy path. If you are an oil-related currency, I think that's where you don't want to own the China beta, because all the comments are from the leadership next year, and then next week they announce the next 5-year plan. China wants to go green. China wants to move away from fossil fuels as well, go to early carbon neutrality, and then start to shrink its carbon footprint. So that isn't really a good story of fossil fuels. So you still go long iron ore, you go those proxies, but for oil and energy and the rest, I'm not so sure.
Okay, so the flip side of the strong yuan, of the strong copper call, is the weak dollar call. What could potentially be the catalyst to further weaken the dollar from here?
Well, I think a massive reallocation story, and we're talking medium to longer term, irrespective of what happens to the election. I think that is in place, right now. You look at the underlying bid for Chinese government bonds. I mean, look at the yields right now at 315, 320 on a hedged basis. It's actually they're quite solid as well, let alone unhedged flow. So as long as China continues to grow and the rest of the world and the US underperforms on growth, I think that reallocation story into Chinese assets, into Asian assets, which is outperforming, I think that will undermine the dollar. It's not the usual suspects, though. Markets want to be short dollars against that the renminbi, Korean won, they're looking at Taiwan dollar, and the rest. And against the euro, sterling, not so much right now. They're kind of in the same boat.
All right. In the short term, though, there is the potential for underpricing a contested election, underpricing what Sabas Boas Weinstein called credit chaos that he's predicting around the U.S. election. Does the dollar strengthen in that type of scenario?
So volatility is going to be key there, and one of the drivers. But if we go back to a March kind of scenario where market just scrambles for liquidity, then probably it will be a dollar positive story. But having said that, all of the facilities established, by the Federal Reserve in March, they are still in place, or they can be reactivated very, very quickly. Right? So I don't think it's going to be as severe as we saw in March. And also, just be wary of what you want to own the dollar against. Dollar yen downside, dollar Swiss downside. People might want to own those trades as well as election hedges.
How much is the UN strengthening on the heels of a Biden win, of the expectation that's being baked into markets?
I don't think that is a catalyst right now. It's more, on the China alone, its own economy, its own numbers are actually strengthening flow. And also, with the asset allocation, with what's going on in the equity market, big tech IPOs coming up, and further opening of the bond market, it's that underlying institutional reallocation to China, which has actually been building for some time now. And again, I think it's moving independently of the polls. Now, if the trade relationship, can be, let's just say, less chaotic over the next few years, that's going to be positive for China. But I think that'll be positive for the US and the world as well, because global trade starts to normalize somewhat. So I don't see any inconsistencies with, say, good US markets and good Chinese markets. But for now, I think it's a China standalone story.
Jeff, final question from me. You've always got a favourite trade. What is it right now?
So, right now, again, I like the China proxies. I want to own Aussie. I want to own a Korean one. And on the other side, probably sterling is my favourite funder right now. I think the BOE's got it wrong. I think they need to do a lot more up ahead. What Sunak announced today, not enough. So I want to add to my sterling shorts.
A seller of sterling, a buyer of the China proxies. Jeff, great to catch up, sir. Jeff Yu of BNY Mellon, thank you. Jeff Yu, Tom Keene, the language of the square mile. That was just a snapshot of it through the last 7 minutes.
Yeah, what's great there is the dynamics. It's the dynamics and the fluidity of the math and the theory as well. What's great about the Bloomberg, John, you take what Jeff, you just said there, and if I'm in a meeting with him on Wall Street, I'm punching up what's called GBP-KRW, where he wants to go long yuan, short sterling. And it's slapped up right now, right within its trading range, going well back 4 or 5 years. So can you affect that trade, John, for me right now and make your usual 6%?
You want me to make 6% for you right now,
We call that 2 field goals.
I wish. Look, I think the trade, from his perspective, makes a lot of sense. More challenges to come for the UK in the economy, the Bank of England threatening negative interest rates, several policymakers are, and a continuation of a better story in China. If you're looking for a currency pair, maybe Tom Keene, that's it. Sterling against the US dollar has actually been stubbornly resilient over the last month off the back of the Brexit headlines.
What I would note is the news flow in all the worry that's out there, the leases of the world, worrying and worrying.
But let me just tell you this.
You know what? You get through the election and you move on. Maybe that's what we'll
I'm
get.
excited for sterling to go down, to weaken versus the dollar, because then we get better gifts from John.
That's true.
I don't have a position in this at all. All I can think of is Lisa and what she said the other day. I walk around with my head down. I walk around with my head down.
Did you write that
looking
down?
At the facts.
How many things have you written down?
Looking at the facts.
There's
Lisa Bramwitz.
Yeah. There's a tattoo parlor down in Soho selling Lisas. You can put them on your arm. I'm looking at the ground.
That's me.
This is beautiful. Lisa.
It's a debate.
You've been to the tattoo parlor next door to Glossier.
I have.
Is that the one you've been to?
I have.
And you know what? I knew straight away which tattue parlor you meant.
Oh, man.
Because you'd been lining up outside Glossier.
You got that right.
For makeup again.
You go in and I'm going to
for anyone that doesn't believe me, Google Glossier, downtown Manhattan, and next door there is a tattoo parlor.
There is?
I'm telling you, that's what Tom is talking about. Show us your tattoo one day, Tom. Producer screaming at me. This is Bloomberg.
The second and final presidential debate is tonight in Nashville. It's one of the final high-profile chances for President Trump to change the narrative of the campaign. Polls show him losing to Joe Biden. Debate rules have changed. A candidate's microphone will be muted at times when the other candidate is speaking. And the president has claimed that that's unfair. He says the same thing about the choice of topics and the moderator being NBC's Kristen Welker. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin have made further progress on a coronavirus stimulus package, but Senate Republicans are reluctant to embrace any deal that's led by Pelosi. Language for the bill would have to be drafted by the weekend if lawmakers are to vote on it before Election Day. And in the UK, Chancellor of the Exchequer Rishi Sunak has unveiled another bailout for businesses hurt by the coronavirus. The latest package is aimed at pubs and restaurants struggling under the UK's Tier 2 lockdown. The UK also raised job support aid, cutting employers' contributions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We are not going to tolerate foreign interference in our elections or any criminal activity that threatens the sanctity of your vote. We've been working for years as a community to build resilience in our election infrastructure, and today that infrastructure remains resilient.
12 days away, Christopher Wray there, the FBI director, on the news of the last 24 hours. The allegation of meddling from Iran and Russia in the US election. From New York and London, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 12 minutes away from initial jobless claims in America, plus 60 minutes, and you'll have a market open in America. Equity futures down 6, negative 0.2%. Just a mild risk aversion through Thursday morning. It lingers just a little bit. Yields down a single basis point to 0.81%. Dollar stronger, euro weaker, euro dollar 118.22, Tom, down a third of 1%.
It's a good day to check. All churning, John, is how I'd put it. I would renote here, 10-year yield like a rock, 0.81%, up near that high yesterday of 0.83%. Right now on Tennessee, on Nashville, and on this debate, someone with experience. Rick Davis is a Bloomberg contributor. His service to John McCain in the election, where McCain took just under 57% of the vote in conservative Tennessee, and we're thrilled that Rick Davis could join us today. The company line, Rick Davis, is the gentleman from Delaware and Scranton needs to pick up the kind of Tennessee voters that voted for John McCain. They have clearly turned Republican. Can Biden, at the margin, pick up those voters?
Well, it'll be tricky in a place like Tennessee, but it depends on which part of the state. As you know, that state is divided along its horizontal axis, and the further you get into the cities in the east, the more moderate voters you have. And you go to West Tennessee, and it's a totally different picture. So I do think that some of those voters may migrate, and we see a lot of evidence in the polling data now that part of what's migrating them isn't ideology, but personality.
Okay, personality. Let's take it out of Tennessee to the states that matter. John and Lisa and I have had real conflicting reports. What is the Davis take right now on the momentum of these two candidates in those key state polls?
Well, I spent a lot of time in Arizona politics over my career, and that's a good place to look because it's got one of the largest counties in the country, Maricopa County. It's a swing county in the sense that you win Maricopa, you win the state. Republicans have dominated in Maricopa County, which is why you've had so many statewide Republicans, and national elections have gone Republican in Arizona. Last time it went for a Democrat, it was in Bill Clinton's second term. So right now, I would say Arizona's leaning Democratic, which would be quite a big deal. And there is no pathway for Trump to get to 270 without Arizona. So when you look at what's happening there, it's the suburban women and the elderly voters. Arizona is a great state to retire in if you like 120 degrees in the summer. And those women suburban voters who have historically supported Republicans back in 2018 started migrating to Democrats, and they are still headed that way today.
So aside from the Democrat-Republican horse race, there's the issue of policy, in particular having to do with the Supreme Court. And Joe Biden, the Democratic presidential nominee, saying in a recent CBS 60 Minutes interview that he would form a commission to study the U.S. court system, this in response perhaps to questions about whether he would support court packing. What do you take from this type of response from him? Is this politically savvy, or will this be read as basically court packing, basically preliminarily?
Well, as Republican, we used to win a lot of elections against Democrats because of just this problem. There was no reason for them to bring up this issue of court packing, but the left side of his party couldn't help themselves. And in response to the current debate about the selection of Trump's selection for the Supreme Court, they let this come out. And so all of a sudden, an issue that was not at all in the public domain throws right on the presidential calendar. And Biden has done a horrible job of answering the question. Simple question: are you planning on expanding the court? All he had to do was say, no, at this point in time, I do not have a plan to expand the court. But in a nod to his left flank, he has clammed up and won't answer the question. Now this is sort of a partial answer that just then drives more debate about court packing. All this at a time when this Thursday, the president's nominee will get voted out of committee, probably without any Democrats in attendance, and you're going to have a new Supreme Court justice that's kind of missing in the debate. And so it's a strange way for the Democrats to handle this issue. They've created this problem for themselves, and I really don't think Joe Biden's doing a particularly good job of answering the question.
Rick, let's talk about managing a campaign and how you manage a calendar as a campaign manager, and how the early voting we've seen this year changes the game. Typically, you'd go out and do that Oppo research. You might sit on it, wait to put it out there in October. Have things changed, Rick, this year? And does it change for good?
It's been changing for quite some time. I mean, early voting has been steadily increasing over the last 2 decades. And so if you have not changed your approach, the calendar actually runs you. You don't run the calendar. And it's one of the great businesses in life where there's a deadline, and that deadline is everything, right? You either win or you lose. Right now, you've already got 44 million people have voted. In some states, 30–40% of the population's already voted. If you are now putting out information that is relevant to the outcome of the campaign, you're already late by almost half. And so you're right. It's absolutely essential that you manage the clock, just like a good Dean Smith basketball game. And so what I think is happening is the Trump campaign lost their initiative after the convention. Early voting began in the start of October. You've had a record amount of early voting so far, and it puts them at risk that even though they may do well by Election Day, it may not be enough to make up for the early vote that has already occurred.
Rick, fascinating stuff, and always enjoy your insight. Rick Davis there, Bloomberg contributor. Tom Keene, isn't that the story? The hill to climb in the next 12 days.
Well, it's going to see the hill to climb, and you look at it any different number of ways. I mean, let's remember here, the president has shown a little bit of polling momentum over the last number of days. John, I'm going to go to you talk about the flip. Greg Valliere, X number of days ago, saying Donald Trump is still in this race. Greg Valliere this morning saying the polling of the last 18 hours is very unfriendly to the president. Where's Greg Valliere going to be on Monday? I don't know.
Look, the polling from Georgia, we had the New York Times poll that had them effectively tied from likely voters, Tom. The polling from Texas, the Quinnipiac poll that we've seen in the last 24 hours, Texas virtually tied. These are states that haven't been blue since 92 and 76. I mean, you've got to go back, Tom, a long, long time for the last time that happened. And I think you add in 2016, and it's why so many people, Tom, just don't buy it.
Yeah, I think that's up there. And what's important here, John, is you and I can't do the research. Lisa can't do the research. We need Kevin Cirilli, like he's been doing 24/7, pounding the research. I mean, that's just the only way to do it, John. I mean, research matters.
Yeah, that's the research. Check it out. For those on radio, it's him at Pancake Pantry. pancakes, syrup, and butter.
Kevin looks very serious about his pancakes. Seriously, we have to put this out on social.
You know.
He looks really, really serious about those pancakes.
Well,
any bacon on them?
Just walnuts.
Not a pile of pancakes without bacon, I've been told.
He's going to have a long neck with it to chase it down. Trust me, 2 long necks.
I won't talk about the eating habits of my compatriots over in America ever again. Oh, no.
That's called having a full
From London
Nashville.
and New York. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, you know, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York and London, for our audience worldwide, this is Bloomberg Surveillance Live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures down about 7. We're negative 0.2% on the S&P 500. The economic data moments away. It's Thursday morning. It means one thing. Bloomberg's Michael McKee drops by to bring us initial jobless claims. Mike.
Well, we're just getting the numbers in here, John, and we got 787,000, a major drop from last week, which was 898,000. Remember the big surprise last week when claims went up so much? We get the opposite this time. The previous week's level revised down to 56,000, by 56,000 to 842,000. So there was a big blip last week that's now gone away, and we've gone down to 787,000. So that would be considered some good news. We've talked a lot about this, about how you don't really want to make a big deal out of the numbers, because the actual level, because of the questions about the long-term numbers in states like California. But the change is obviously a major bit of good news in terms of the economy. We've had this story that the economy is slowing down, and it looks at this point like maybe the number of jobless claims has fallen off a little bit. Now, the problem I'm having here, guys, is that here we go. Here's the whole data. They say California has fixed its problems, and we can show you what has been going on, I think, with California for weeks. They've been using the same numbers over and over again, 262,000. Well, this week, California records 158,877. So that is the difference. California back on the rolls with at least more accurate numbers, and it shows a big decline in overall numbers. One quick thing,
please,
Tom,
Michael, please.
I just want to give you the total number of people getting some kind of benefits falls to 23,150,000. That's more than 1 million lower than in the week before. That's back to October 3rd, because that number is 2 weeks delayed. So it's also a big drop, even if 23 million is a lot of people.
Look, these are unambiguously good for the president. This is going to be perfect timing for the president at the debate tonight. And we should point out, John, I believe you mentioned Mr. Kudlow miraculously picked up the phone and dialed 1-800-PHARAOH today for a conversation. I mean, Michael, they want to get the message out here, right? These are just unambiguously better numbers, right?
Well, yes, they are unambiguously better numbers when you're looking at the weekly change, when you're looking at the total number of people still getting jobless benefits. I mean, you look at 787,000. The prior high in the Great Recession was 650,000 or so. So we're still way above that, and 23 million people still getting some kind of benefits is nothing to be too happy about. So the president has a sales job to do tonight if he wants to make the case. He has to say it's not only a little bit better, but it's going to keep getting better, and here's why.
So I'm looking right now at the market response, and it's not actually responding all that much. I expected to see more of a pop in futures on the heels of much better than expected jobless data, still a very high number. Why do you think people perhaps are not responding more to the optimism, to the potential momentum that was unexpected by analysts?
Well, I think you got two things going on, Lisa. We're all working off of these high-frequency numbers rather than data that is a little slower to come in, and there are contradictory numbers. I mean, you look at some of the open table numbers have been down. We see the TSA boardings going up. Retail sales have been slow, but rising just a little bit. What do you make of all this? It's hard to know. And now, with 12 days to go to the election, there's a lot of uncertainty about what happens there, and I think that is probably tamping down at this point on the market reaction to claims one way or another. The notes I was getting this morning from bond market traders are looking at the jobs report for October, which comes out 3 days after the presidential election. And they said that, we'll get the election out of the way and hopefully know something about who's going to be running the country, and then people turn back to the economy.
Michael Mickey, thank you so much. Really interesting report. Very different, of course, the California asterisk there as well. Right now, with a very smart research note, great acuity on it, Thomas Koster joins with Pictet Wealth Management. Thomas, I love your paragraph on gasoline demand. You say, look at the stuff that people actually do. Define for us the year-over-year drop in gasoline demand, and what does it mean for this economy?
Yeah, indeed. So gasoline demand on a weekly basis, and data was released actually yesterday, it's down 12% year on year. So that's still a very feeble, piece of data, and that suggests to me that the recovery is, progressing at a slow pace. and it seems to be even stalling going into the fourth quarter. So I remain prudent about the outlook, especially going into the Christmas period. And I think this data on gasoline demand tends to confirm my view, I would say.
Broaden that out, Thomas. What do you see in the high-frequency data?
Well, so I think that the piece of news that was on the strong side was retail sales. But I think, the other, data I'm looking at is how much in terms of payments the federal government is sending in terms of unemployment benefits. And that's really falling off a cliff. So we are into an income cliff at the global at the U.S. level, and especially at the household level. And this income cliff could lead to a sharp slowdown in consumption. And again, we have to keep in mind that Thanksgiving and the Christmas shopping season, this is the most important shopping season for the U.S. consumer. And so we are having this income cliff at a time when actually the consumer is supposed to go out and spend. And I'm nervous about that.
So a lot of people are nervous about the second dip and the second wave of infections. Thomas, I wonder from your perspective, if we hit that income cliff and we don't offset it the way we did 6 to 9 months ago, the nature of the next slowdown and that loss of momentum, can you explain the difference between what we might experience and what we have experienced?
Right. The recovery was really driven by the consumer, again, due to, high unemployment benefits. We've seen incomes rising, but incomes due to the federal government. It was not wage income going up, to make sure I get it right. But the problem right now is that we have an income cliff. And I do not believe in the theory that there's accumulated savings over the summer, because what happened is people paid down their credit card debt and their credit cards. And the problem is that we're going into this crucial shopping season with, I think, much less ammo, if you will, and the consumer is in much weaker state. And if you look at confidence surveys, well, they're a bit all over the place. But if you look at what people are ready to spend on durable goods, for instance, I'm nervous about that. So I think the signals are not good going into that shopping season. And the fact we have gasoline demand, so this is actual driving from real people, that's still down by more than 12%. That's no good going into that fourth quarter.
Given the pessimism that you just described, and then pair that with the upside beat in fewer jobless claims that just came out than expected, granted, still an astronomical number compared to history, how much are you looking for the momentum to slow? What are you seeing? And are jobs no longer a leading indicator going forward?
Right. So in terms of GDP, I think if we don't have a fiscal package, we're looking at probably zero growth in the fourth quarter. So after more than 30% growth in the third quarter. And if we have a fiscal package, because I still do think that in November, Congress will kind of wake up and pass a small or moderate fiscal package that will help to save consumption, in which case I think we could have growth of around 5%. So it's really the choice between 0 and 5% in my view.
Did you say 0 and 5%? That is a massive, massive, massive canyon. What's the in-betweenness there? I mean, how do we get back? Let's say Morning in America is a run rate 2.8% GDP. How do we get there?
Right. So the only, one piece of good news in the U.S. right now is the housing market. But again, it's been performing very well. And I'm a bit afraid that, it won't be able to support growth again in the fourth quarter as it did in the third quarter. So it's like, if you will, a Boeing 747, we had 4 engines, but now we're kind of only running on 1. And you see, housing losing momentum, consumer spending losing momentum. I'm also worried about corporate investment. I think that could also lose momentum, especially in the oil sector. I think with the recent drop in oil prices, what you could see is oil investment could be slashed as well. So the signals are not really good going into this fourth quarter, and we really need more fiscal spending, including unemployment benefits to be boosted again.
Thomas, Tom was asking you a question about trend growth, and he mentioned something north of 2%. Do you think trend growth, best case, coming out of this mess, best guess, does it have a 1 handle or a 2 handle?
Yeah, it's probably have a one handle. The problem in each recession, we lose productivity growth along the way. And that's always the case, unfortunately, and I think it's still the same thing here. The other worry I'm worried about in the US is population growth. What we're seeing in population growth, especially new birth, that's really scary. You see natality going down, so you see less population growth, you see less immigration, and that's not good for headline GDP growth. It's very simple. If you have less people, you have less growth.
You need more productivity. Thomas Costa, great to catch up, sir. Fitech Wealth Management Senior Economist. Got to say, if you're just tuning in, the data better than expected. That was just a very concerned Thomas Costa on the path forward. And Tom, you asked the question about trend growth. A one handle. That's what you get your hands around, apparently, a one handle for trend growth.
It's called trend growth, folks. And the other fancy phrase you'll hear with bow tie phrase, potential GDP. There's a number of people very good at this. And to be fair, John, Michael Ferroli at JP Morgan, and I think of the wonderful John Herman at MUFG, they've always modeled a banded growth. And you're right, John, the bottom of that band is one-ish. The problem with that is I don't know how politically the nation moves forward with a sub 2% trend growth. It's just basically un-American.
Fuels division and tension. More of it. Tom, the bond market's bid off the back of a better number. Go figure. Yields 80 basis points on a 10-year. We come down a couple of basis points on 10s, on 30s, down another 2-3 basis points in today's session at about 161. Interesting that this market's not really responded. Lisa mentioned this. Not really responded, Tom, to that better than expected data.
Yeah, there's no question about it. I've been looking at the screen. Folks, we look at a screen here with the 4 asset classes and lots of blinky red and green, and, it's really not blinking right now. I would go back again to the larger trends, John, like Jeff Yu of BNY Mellon mentioned, with a 6.68 yuan. That's a big move.
Tomorrow, a big conversation. National Economic Council Director Larry Kudlow joining us outside the White House on that stimulus conversation from London and New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Some of President Trump's advisors are urging him to change his tactics for tonight's final presidential debate in Nashville. They're said to have told him to trade his aggressive demeanor for a lower key style, and it's not clear what he'll do when he faces Joe Biden. The president trails in the polls, and the debate is one of the last high-profile chances for him to turn things around. The top U.S. spy chief is accusing Iran of meddling in the presidential election. Director of National Intelligence John Ratcliffe says the Islamic Republic faked a series of intimidating messages to Democratic voters. He said both Iran and Russia have obtained voter registration information, and Tehran is already using it. The founder of Saba Capital, Bose Weinstein, managed to be one of the biggest winners in the pandemic sell-off. Now he's positioning himself to win again before the presidential election. Bloomberg's Eric Schatzker spoke to Weinstein in an exclusive interview.
When I look at how low credit spreads are today versus objective measures of future volatility, like the VIX, and even in our own minds, when we think about the onslaught of news that's going to come out, I believe that credit, when spreads are low as they are today, is asymmetric. It's shortfall, and I want to delve into that deeply. And I think the markets are rightly telling us that there's a very good chance for volatility.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is
the Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
When we think about where do we get money from, the creation of debt and the printing of money, and where do we get the support when we're talking about the next bill that might or might not pass, next stimulative, it has big implications to the economy, to the markets, and so on.
Ray Dalio of Bridgewater, doing what he's been doing recently, out with a new book, and of course the themes there of our macro economy, of our global political economic system. This with the challenges of Bridgewater recently, of course, many others in alternative investments having challenges as well. Never challenged is Barry Ritholtz, Bloomberg opinion columnist. He'll be hanging on every word of the debate tonight, no question about that, with Ritholtz Wealth Management as well. Barry, you had an opportunity to sit down with Mr. Dalio. First of all, did you address Bridgewater? Did you address the challenges of doing an interest rate parity strategy at the zero bound?
Yes, in fact, that was one of the questions I had about risk parity, about the all-weather portfolio, about gold, and specifically, what should investors be doing as rates, you know, the 10-year is under 1% on the way to zero, what do you do? And his answer was, as rates have fallen, you should be reducing the amount of bonds in your portfolio. If there is no yield, why bother? At a certain point, there's just no capital gains possible. He was very, very aggressive about you want to see less and less bonds in a portfolio as you approach the zero bound.
I'm glad you went there, Barry, because this is really germane, and I'm sure it's on your Masters in Business interview with Mr. Dalio as well. If our listeners and viewers are told bonds are difficult, where do you go to get the advantages of that fixed income coupon stream?
So I have a slightly different answer than Ray personally. For our clients, we are looking at things like preferreds. We've explored dividend strategies. It's the same risk as equity, so it doesn't work. We've looked at a number of the covered call and call writing strategies. They just add a whole bunch of risk and complexity and cost. That's the problem with those. They kind of try to create a free lunch. The internal debate is this a free lunch or not? And I look at those skeptical. The trade-off, the thing that's most in between stocks and bonds are the preferred.
Yeah.
They have a couple of risk characteristics to them that make them unlike bonds. Just look at how all the preferreds traded back in February and March of this year. They all took a 30% shellacking, just the way equities did. The difference is they 90% recovered back to par, for back of a better word, $20 or 25 or 100 or whatever the par they're using. And they're still, 3, 4, 5, 6% yield, depending on the risk properties of each. It's not there. So here's the bottom line. Yields are low. You have to accept that. The only way to get more yield is to take on more risk. That's the bottom line.
Okay, so this is the difficult thing when listening to Ray Dalio. He has a lot of big philosophical themes about monetizing debt, about the widening wealth gap between the richest and the poorest individuals, both in America and globally. And yet, are you saying that it all comes down to an investment strategy that looks like what everybody else is saying, which is go long risk, and you know what? You're not going to get paid for it.
Well, so far, people who have been going long risk on the equity side, they've been getting paid for it. I think he's much more nuanced than that. When we started talking about the political and wealth gap and the disparities in power and the increasing concentration of wealth and how many people have not had the same equal opportunities to succeed, he thinks that's a drag on the economy. And he lays out a kind of compelling case that if the president is reelected, here are the areas that are going to do better. Here's what you should expect to do poorly. And if the challenger wins, well, here's what we're going to see from that. You're probably going to see a whole lot more fiscal stimulus. You're probably going to see a whole lot of infrastructure spending and Green New Deal and all that sort of stuff. He goes, one has a higher possibility of seeing yields and inflation tick up. They both are pretty big deficit spenders. It's not like the Republican gets to say, oh, the Democrat's a big spender. We see what's happened with the deficit here. The impact isn't so much this is better than that. It's which sectors of the economy are going to thrive or do poorly under each administration. It was pretty nuanced. And as always, Ray is always he's such a historian. He does these deep dives into 1,000 years of, we haven't even gotten to China, the rise of a big power. There have been, 17 such instances of a new power coming along in the past 1,000 years. And I believe 12 of those ended up in a shooting war. The rest of them were economic or currency wars.
Well, Barry, I want to switch gears here if I could, and that is over to the vaunted mystery of small cap and maybe a rollout away from the big tech stocks. Do you see evidence of that yet? I mean, are you on board the big rotation to small cap? We got about 15 different opinions here.
Yeah, so we've been waiting for emerging markets to mean revert. We've been waiting for small cap to mean revert. We've been waiting for value to mean revert. The bottom line is the combination of very low rates and even if you're not in a lockdown, the work from home pandemic circumstances, they benefit bigger international companies that have the ability to tap the capital markets for either equity or debt issuance. That tends to be the larger companies. The last time I looked at the top 10 stocks in the NASDAQ and in the S&P 500, they were about 27% of the S&P 500. That's pretty close to an all-time high, and they have since ticked up since then. Yeah. This is their environment. Tell me when this environment changes, and that's when you can expect to see some sort of a rotation. But, this could go on for another 6 months or a year for all we know.
Yeah, Barry Riddles, thank you so much. Always good with Bloomberg Wealth and, of course, his work for Bloomberg Opinion as well. The news flow is absolutely extraordinary, of course, culminating tonight in the debate. David Weston leading our coverage there. Kevin Cirilli is in Nashville as well. And any other number of news stories. Claims came in really quite good with constructive revisions as well. A lot of that off of California's adjustment finally to catch up with the national disaster that we've seen in this pandemic. There is another news item. I don't know what to make of it because I'm really not expert on this, but this is on the Maxwell-Epstein release of court documents. This was widely anticipated for 9 a.m. this morning, and the over 400-page document has been released to the public, and that will be for certain parts of the political economic society of great interest. We wanted to bring that information to you. In the markets, we see futures -7. The yield, 0.81, really remarkable stasis in yields right now with the euro 118.29. Please stay with us through this political and economic day on Bloomberg Television and on Bloomberg Radio. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Even in a pandemic, big companies have maintained easy access to financing, but small businesses and consumers are finding it much harder.
There's certainly a large part of the economy that's not being seen by the banking system.
I'm Shonali Bassick. Join me for a Bloomberg special report, The Credit Disconnect, this weekend on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts
right now with 30 minutes until the opening bell. Equity futures down 8. We're negative 0.25%, and we begin with the big issue. The stimulus roadshow continuing amid seemingly a never-ending 48-hour rolling deadline. Talks resuming later today with House Speaker Nancy Pelosi remaining, guess what, cautiously optimistic.
I'm pretty happy. I think we have a prospect for an agreement. There's some delay on the part of the Republicans about the appropriations piece of it, but I hope that will be resolved. I'm optimistic because even with what Mitch McConnell says, we don't want to do it before the election, but let's keep working so that we can do it after the election. We want it before.
Chief of Staff Mark Meadows sounding less optimistic, telling Democrats to make some concessions of their own.
The president's willing to lean into this, and if we see any amount of fair negotiations from Speaker Pelosi, which we haven't really seen today, when you look at $1.9 trillion, is Nancy Pelosi really going to tell the American people that I'm not going to send that relief to you just for political reasons?
President Trump preparing to blame Democrats as well, tweeting the following, quote, "Just don't see any way Nancy Pelosi and Chuck Schumer will be willing to do what is right for our great American workers or our wonderful USA itself on stimulus. Their primary focus is bailing out poorly run and high-crime Democrat cities and states." All of this setting the stage for tonight's final word in the final presidential debate in Nashville, Tennessee.
This election is a choice between a Trump super recovery or a Biden steep depression.
This president cares more about his Park Avenue perspective on the world, the stock market, than he does about you.
Biden's plan to kill the American dream.
It is a presidential responsibility to lead, and he didn't do that.
COVID, 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 COVID. That's all they put on. That pandemic is rounding the corner.
Turn the corner. Things are getting worse.
You must defeat Sleepy Joe Biden and the radical left.
This president embraces all the thugs in the world.
He has no clue, but that's all right.
Joining us now from Nashville, Kevin Cirilli, Bloomberg Chief, Washington correspondent. Kevin, quite a night coming up for you.
Quite a night coming up. Three things on my radar as it relates first and foremost to stimulus. Some new headlines crossing the Bloomberg terminal. Senator Marco Rubio, a Republican from Florida, meeting with Senator Ben Cardin, a Democrat of Maryland, and talking about small business. They're also going to have House members in on that meeting. Again, further indication that negotiations are now continuing not just at the high leadership level. Secondly, tonight at the debate, yes, expect the economy, expect the fiscal stimulus, but also expect foreign policy and geopolitics. New developments overnight from the Director of National Intelligence, John Radcliffe, at a hastily thrown together press conference ahead of news reports yesterday, suggesting that Iran and Russia hacked via cyber in terms of voter registration. That no doubt will come up. And then finally, the third point here is how will foreign policy play for both of the respective campaigns? For the Biden campaign, they're going to say that the Trump administration did little to better protect democratic institutions following the 2016 election. But for President Trump, facing sagging battleground polls and a bevy of battleground state polls that just came out from Fox News within the last day that shows him trailing in states like Pennsylvania, Michigan, Wisconsin, he needs a reset. Will he go combative or will he go more moderate? This is the question that will be on everyone's minds tonight at the debate as he looks to get momentum heading into the November 3rd election day when already 40 million Americans have voted. Jonathan?
Well, that's the problem, Kevin Cirilli. Already 40 million Americans have voted. And we've all seen the polls, similar polls, the last 24 hours. One poll, level in Texas, another poll, level in Georgia. Kevin, who does he need to speak to tonight?
Well, twofold. First and foremost, he can't dismotivate the base, although internal polling from the Republicans suggests that they are motivated to turn out. But he also needs to make inroads with suburban women, especially those who are on the fence in terms of whether or not to show up and turn out like they did in 2016 to some extent for his campaign as well as for Republicans. When you've got Senator Mitt Romney, a Republican of Utah, saying that he wrote in a different candidate, he didn't say who, that's the type of Republican that Biden is hoping to pick up and that President Trump is hoping to win back. And then finally, I would just very quickly note, as it relates to some of these polls, yesterday I spoke with the chairman of the Democratic Party, Tom Perez, and I said, what keeps you up at night? And what he said to me was a deja vu of 2016.
Kevin, you have the glow of a man who just had a nice pile of pancakes. I know you just had a nice pile of pancakes, Kevin. It's good to see you. You enjoy yourself. Long day ahead of you. Kevin Cirilli from Nashville, Tennessee. Thank you very much. Let's get to the price action this Thursday morning, shaping up as follows in the equity market. Equity futures, just a little bit softer, down 8 on the S&P 500. We're negative 0.25% there. The bid stays in the bond market. Claims better than expected, but some California noise, so to speak. Mike McKee will give you the detail on that a little bit later. Down a basis point on 10s to 0.81%. The dollar stronger through much of G10, euro dollar 118.28. Here's a take from Morgan Stanley recommending investors buy any dip surrounding the election. Mike Wilson writing the following: if the S&P 500 were to go down to 3,100 and we didn't know what was going on with the election yet, we're going to be adding to risk at that point no matter what. His colleague, cross-asset strategist Andrew Sheets, expressing a similar sentiment, writing the following: while we think the S&P 500 would initially trade lower in a blue sweep scenario, we'd ultimately view this as a dip to buy, with a bull market still intact. Andrew, I'm pleased to say, joins us now for more. So, Andrew, let's talk about that blue wave leading to a dip. That's not what's been described on this program by many guests before you. Why?
Yeah, so thanks, and good morning. Look, I think there are a couple of factors that would play into that. I think the first is that blue sweep scenario, I think, is the scenario where we at Morgan Stanley think interest rates would rise the most. And I think given current correlations, that rise in interest rates would be problematic for the S&P 500, even if actually it might be less problematic for other equity markets around the world. I think secondly is that I think the market would move to price at least some probability of shifting corporate tax policy, shifting capital gains tax policy. It's hard to know exactly, or we don't know exactly what a Biden administration would ultimately do, but I think the market under a blue sweep scenario should at least provide some discount for it. And then third, and I think you actually kind of hit the nail on the head here, there's been a lot of focus on the polls, and I think a lot of discussion over, well, if a lead by Biden is so well flagged in the polls and the markets aren't responding to it, then maybe it won't have any market effect. But I think something that's quite clear from a lot of our conversations is I think as much as we're all talking about the election, I don't think investors are actually moving and investing and changing their positioning around ahead of it because, as you mentioned, there's still so much uncertainty. There's, I think, still a lot of kind of carryover from 2016 around that surprise event. So I wouldn't assume that just because the markets haven't reacted so far, they wouldn't react to that sort of event.
Andrew, what we've said repeatedly on this program, and I'm sure you share this view as well, it wasn't just the outcome of the 2016 election that was a surprise to many people. It was the outcome of that outcome in the markets. People started suddenly talking about the Trump trade, infrastructure spending. But what really defined the last 4 years were two things for markets: tax cuts and a trade war. Andrew, as you've pointed out, elections have consequences. How difficult and how soon can you gauge what those consequences actually are?
Yeah, so I do think the makeup of Congress is going to be incredibly important here. I mean, I think this is a comment that you've been making and many people have been making, but I do think congressional control is really the difference between a potentially kind of large and significant fiscal response and kind of continued fiscal response, something that could drive a very different recovery than what we saw following the global financial crisis, and a much more muted response that could risk a much slower, weaker recovery. So I think that is a huge kind of fork in the road as it pertains to markets between these kind of two futures, one of which might be a sharper recovery, more inflationary, more reflationary, and the other is much more like what kind of followed the GFC, slower, weaker, more disinflationary. So that to me is the real kind of wedge for market outcomes. And I think as you mentioned around 2016, and we also saw this in 2008, I think we also all have to keep an open mind, right? The conventional wisdom has been wrong a lot about what different political outcomes mean for the market. And so I think we all have to kind of take that with a grain of salt and be willing to update our views as events unfold.
Andrew, the bands are so wide. We could have something like 2 trillion plus of fiscal stimulus on a blue wave. If you had a divided government, you might not get anything at all. I know you're thinking about this, persistent fiscal failure. As you look at the markets cross-asset, Andrew, what's the most sensitive part of financial markets worldwide cross-asset right now to the prospect of persistent fiscal failure?
Yeah, sure. So look, I mean, I think there are a number of things that are affected, but in terms of what would be most affected, it would certainly mean that bond yields would not rise. It would keep them low and where they are. I think it would be very supportive of the continued kind of outperformance in tech and growth. I think it would also probably present some risks to commodity markets. In the sense that I think those are expecting a more robust, stronger bounce back. And it would imperil, I think some of the small cap, more cyclical reflationary trade that we happen to believe in, that we are supporting. So, our current positioning, our current recommendations are consistent with what we think is the fact that it's more likely than not that we have a stronger fiscal response coming out of this election. But if that doesn't happen, I think it's a risk to that reflationary view, and it's a risk to some of our current recommendations.
Andrew Sheets, always great to hear from you, injecting some much-needed humility into the conversation ahead of the election. Andrew Sheets there of Morgan Stanley. Equity futures right now, -8, down 0.25% at the market desk with your movers ahead of the opening bell. Here's Bloomberg's Abgo Doolittle.
John, let's start out with the big one, or Tesla. Shares are popping higher after the electric vehicle maker company did put up a big clean quarter. They beat right across the board, the 5th straight quarter of profitability. Importantly, margins are higher, and they reiterated the goal of delivering 500,000 electric vehicles this year, and even said next year they could deliver as many as 1 million. Investors clearly liking it. This year's top stock still on the top of the pile. As for some other earnings movers, Coca-Cola is popping on a good quarter. They beat sales by more than 3%. They're saying that challenges are ahead, but they do think they will recover faster than the economy. We also have AT&T sharply higher in a strong quarter. Lots of gains in wireless, surprising. American Airlines down about 0.6%. They beat fourth quarter estimates. Those, of course, are greatly lowered. Capacity for the fourth quarter down more than 50%. Recovery far off. And finally, Chipotle. Interesting, they actually put up record revenues, John, but delivery, because it grew so much, up more than 200%, weighed on margins. That stock is down.
Been once for anyone who's been following this week, and Abigail and I talking about restaurants. Abigail, thank you. Coming up, COVID hospitalizations climbing throughout the United States with record infections spreading across Europe. That conversation coming up next with PIMCO's CIO of Global Fixed Income. Andrew Balls is coming up next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The more testing you have, the more cases. They say cases are up. Yeah, testing is up. We have more testing than India, China, and almost every other country put together.
We make up 4% of the world's population. We have 20% of the world's deaths. We're in a situation where we have 210,000+ people dead. And what's he doing? Nothing.
Presidential candidates playing the blame game with a second wave of outbreaks setting alarming milestones around the world. US hospitalizations reaching a 2-month high, with cases intensifying throughout Europe as well. Spain and France both topping 1 million total infections, while Poland, Germany, Hungary and Romania post a record rise in daily infections. Bloomberg's Guy Johnson joins us now with the latest. Guy, you and I have been talking about this the last few weeks. The numbers, not good.
No, the numbers aren't good. Clearly, the virus is out of control in large parts of Europe at the moment, John. The numbers are climbing and climbing quickly. There is a great deal of talk of the kind of circuit breakers that are now being used in parts of the UK. A 2-3 week period, maybe, of complete lockdowns. Governments would desperately like to avoid that. The economic cost of all of this is really mounting, and mounting very quickly as well. We're going to get PMI data out of Europe tomorrow for October. It's going to be fascinating to see exactly what is happening, particularly in the service side of Europe's economies as we go through into winter. So that is the situation right now. Governments are stepping up, trying to figure out a way to protect their economies. Rishi Sunak, the Chancellor of the Exchequer this morning here in the UK, coming out with a beefed up package of help for the British economy, basically standardising the help that are available to different regions of the country as they go from tier 1 to tier 2 and then potentially up into tier 3 as well. Hopefully we are going to see at the press conference, which is going to happen at 11 Eastern today, John, 4 p.m. here in the UK, we may get some understanding of what the cost of all of that is. In terms of the way that markets are reacting, we're at the bottom end of the range for European equities, which has been very range-bound for quite some time now. While we have seen yields being lifted over the last few days in tandem with what's been happening in the States, we're now seeing bond yields pushing back lower again. And we did see some very disappointing consumer data out of Germany in the form of the GfK data a little bit earlier on. A lot of grim news coming out of Europe right now, John.
Guy, thank you. Looking forward to the coverage with Alex Steele in about 40 minutes' time. Just want to bring you some breaking news very quickly. The Senate committee advancing Amy Coney Barrett's Supreme Court nomination. That panel vote was unanimous, but with no Democrats present to vote. The Senate will vote on Amy Coney Barrett's nomination, for the confirmation, rather, on October 26th. So that is this coming Monday, and that is where the focus has been for Senate Republicans on Capitol Hill, on the Supreme Court nomination and the confirmation of Amy Coney Barrett, and not on the fiscal plan. What changes as we come out the other side of the weekend? PIMCO expecting a cyclical recovery with some economic scarring, writing the following: the first half of our secular horizon is likely to be characterized by the long climb to recovery, with above-trend growth for a couple of years as the global economy emerges from the deep hole of the COVID recession. PIMCO's Andrew Balls, I'm pleased to say, joins us now. Andrew, always great to get you back on the show. Fantastic to see you. Let's just start right here. The prospect of moving out of this mess when we face potentially a second dip in Europe and maybe worse still to come.
Yeah, so you're seeing the second wave here in Europe. I don't think this is probably should be a big surprise to anyone. This is going to be something which is difficult through the winter. In terms of our forecasts, we tend to think that it's going to be another year to 18 months before you get back to the level of GDP from the start of 2020. So it's a long climb, as we say, to get back to where we are. Where we were. A couple of important swing factors. Firstly, fiscal, which you've been focusing on in the US in your program, and more announcements here in the UK today. And then the second thing is the various health interventions. So there's a lot of potential for good news in terms of vaccines. There's already been good news in terms of treatments. So this is not going to mean that we don't have a big problem over this winter. But I think it's consistent with this idea of the gradual recovery over the next year, 18 months.
Well, Andrew, let's push this through the bond market and start in Europe, in Italy. If we have another shock, and we seemingly are getting one in Europe right now, how do Italian bonds react to that? Do they behave like a credit, again, as they have done time and time again over the last 10 years? Or do you see more sovereign-type characteristics to the trading of BTPs in the last few months?
Yeah, so I think Italy this year, you did see a spike in March in terms of sovereign spreads, but is coming significantly. And I think this reflects just the European policy response. So the European Central Bank was quick. Earlier this decade, they spent years focusing on arguing about what the right thing to do was, but this year they were quick in terms of their actions. And then, thin end of the wedge, but the European Recovery Fund is significant. So far, you have had well-behaved markets. Italy has behaved well. Spreads have tightened, and that's very important because everywhere there is a big increase in fiscal spending, the need for a big increase in fiscal spending and deficits, and you don't want this combined in Europe with sovereign instability. So you never know. In Europe, it's often one step forward, two steps back. But I think thus far you can have a reasonably positive view that we're not going to have a repeat of the sovereign crisis we had earlier in the decade.
So how would you manage your exposure in Europe right now with regards to peripheral bonds, Andrew, and also with regards to peripheral banks and bank credit?
So I think that Italy looks fine. It's very liquid. I would still, to your earlier question, see it as a kind of a source of credit risk, not safe government bonds, but credit risk. But looked at like that, it looks pretty attractive. We're a bit overweight in a number of our portfolios in Italy, also in Spain. I think European banks, there are some good opportunities lower down in the capital structure and in some of the peripheral countries, but our preference tends to be the UK, the US, Switzerland, where we think there's better valuation in the UK, greater stability in terms of the US and the regulatory environment.
Build on the United States for me, just away from credit, Andrew. In the last couple of days, Treasury yields have backed up on a 30-year, back to about 160, on a 10-year, through 80 basis points, still range-bound 50 to 90 over the last 4 or 5 months or so. Andrew, do you have a number in your mind where any potential sell-off in Treasuries becomes self-limiting?
Well, I think that's a good question. I think if you get above 100 basis points, 100, 125 basis points around there, I think that I would want to be adding to Treasury positions there. And then, looking a bit further out, it's going to be hard in the US and the rest of the world to see a very big rise in yields for two reasons. First, I don't think that economies will be able to withstand a very large increase in market-driven yields. And secondly, I don't think central banks are going to allow it. You're going to have very strong efforts against this to anchor the front end of the curve. You have, in some places, explicit yield curve control, other places, kind of unofficial yield curve control. So I think over time what that means is steepening positions in bond markets on yield curve, steepening positions, anticipating that better macro news or better news in terms of inflation would be priced more into the longer end of the curve, the 30-year part of the curve, while central banks are continuing to anchor the 2 to 5 year part of the curve.
Andrew, always great to get your thoughts on this programme. We appreciate your time. Thank you, sir. Andrew Balls there of PIMCO. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls, and later at the opening bell, Dan Ives of Wedbush joins us to break down Tesla's results. And he has got a big bull case call in the mix too. That's around the corner. This is Bloomberg.